Waiting a long time. You've been waiting a very long time, including 30 seconds just now. Thank you for that. I hope you're all settled in, ready for a great program here. I'm Ian Simpson, and I have the pleasure to host Stage 2. I come to you, yes, from Switzerland, from Rule Match, where I'm the Director of Marketing and Communications. Besides the privilege of hosting Stage 2 today, I also have the privilege of hosting our Rule Match Spot On podcast, a podcast focused exclusively on institutional crypto and digital assets. Maybe a little bit more about that later. But as you can see from the program, there's a lot going on. And I personally think the first panel, which we'll introduce in just a moment, is perhaps the meatiest and perhaps the most interesting, but it depends on your perspective. If you're settled into your seat, don't feel too comfortable, because when I tell you a little bit later about something special, you might want to change seats. But a little bit more on that later. Our first panel coming up is going to be focused on CASPs, and if you're here in Liechtenstein and you don't know what a CASP is, that might be a problem. Crypto asset service providers, and the first panel is going to be focused on lessons for CASPs, operating a CASP, lessons from centralized exchanges and stablecoins. The moderator of that panel, which I have the pleasure to introduce to you in just a second, will be asking some questions. And if there is time, there will also be a chance for you to ask questions as well. I'd like to welcome Dr. Siegfried Herzog from Compliance Labs Liechtenstein. Come on out, jump on the stage. Here you go. Fantastic. I have one question to you. How many questions do you have for the panel this morning?
Oh, I prepared like 50, but
really?
We don't have time for that. No.
That's not very many.
Everybody gets one question.
Good.
And we're going to jump into discussions. I hope that
good.
We're going to have a fruitful discussion.
Very good. Please take your seat. Take it away.
Thank you.
Mm-hmm.
So, good morning again. The panel is full of experts. So, just to give you a brief background on Bandeep. Bandeep is an investor, thought leader, pioneer who is engaged in ETNs. ETNs is exchange-traded notes, and via Fineca, and is about to launch a stablecoin. So we will hear something about stablecoins from Bandeep. The second panelist is Monty Metzger. He's running LCX in Liechtenstein, which is a crypto exchange, and he's an internet veteran, acclaimed thought leader on the future of digital, and as I said, the CEO and founder of LCX. And the third panelist will be, or is Salen Nosek. He's the vice president of growth at Crystal Intelligence, and was a former employee of the European Commission. So we have like three very strong speakers here, divided by stablecoins, exchange, and of course, blockchain intelligence. Please give them a warm welcome. So, to make sure that I did not forget anything within the welcome remarks, I open the floor for everybody to just, if you would like to add something to my introduction, please feel free, starting with Bandeep, and then we will jump into the questions.
Thank you. Your introduction was spectacular, so I can't really say much more. The only thing I would add is that the stablecoin that I'm putting out in the market is right now looking at which jurisdictions, so the topic is very pertinent. And it is with the, my co-founder here is the co-founder of Tether, who was also the former CEO. So he's been through this before. He's obviously the godfather of stablecoins. So if there's one person who's on our team who's authoritative, it's him. And that informs our decision as to where we go next.
Super interesting.
Good. I'm excited to be here. You know, we're in Vaduz, Liechtenstein, And it's so great that we are having the Token Summit here to really get an outreach of why it is important to be here. Because we are at the border to Switzerland and Germany, and like landlocked in the heart of Europe. But Liechtenstein stands out because they always had been a pioneer of a financial hub, a pioneer in blockchain with the Blockchain Act, and now pioneering again because it's the gateway to Europe for the crypto valley. And that's why we're here also. That's why we have the L in the name with LCX, the Liechtenstein Crypto Assets Exchange. And we are trying to bridge the traditional finance to the blockchain innovation. That's our core mission, and that's where we started in the late 2017 and then incorporated here. And we're very proud to be in Liechtenstein. Myself, I had been an entrepreneur since the 90s, started multiple companies, then switched the sides to become an investor. And as an investor, we had a regulated venture capital fund, and we'd like to invest in crypto quite early. So 2014, we bought some tokens in Bitcoin, but in general, we had been sidelined because there was no regulatory framework, no custody solutions, no players. Even all the exchanges had been completely offshore and in a gray zone. And this is about to be changed. Europe will be the hub for crypto innovation. It is the first pan-European structure with MiCA, what we are talking about today, which is really leveraging this market of 30 plus countries, or 30 countries in the European Economic Area, 450 million population, and now, coming out with something which is starting out of Liechtenstein and really going global.
Perfect. Thank you. Salam?
I think we'll be hard to follow Monty on that one because he's clearly very excited about being here, but I do love this country as well. It's always great to fly into Zurich and then beautiful train ride over. So as Sigi mentioned, I'm Zalan. I'm normally based in Amsterdam. That's why the flight over. But I've been with Crystal for 5 years now. Originally, I joined Bitfury, and Bitfury is probably more of a household name in the kind of the OG crypto space, big mining company. What we found internally was that we needed some way to justify where we were sending our money. You know, mining plenty of Bitcoin, but no way for the Dutch government to understand, is this legitimate, is this safe, or is it going directly to money laundering? So internally, we started developing a product, and we became a public consumer-facing product in 2018. And we recently rebranded from Blockchain Analytics to Crystal Intelligence, and that's kind of more of a testament to what we focus on, in that we focus on really deep forensic intelligence and getting the best understanding possible about what's going on in the crypto economy to make it as safe and secure for everyone to participate in as possible. But otherwise, great intro.
Thank you very much. So I think we already are getting a little bit warm and we're touching the topic from the side. So why don't we jump into a very special part of the topic, which is actually stable coins and MiCA. Since MiCA is giving like a certain, or not a certain, but its own framework for stable coins, it's really interesting to hear from you, Bandeep. Is the incoming EU regulation liberating or protectionist for the global stablecoin industry? What do you think about that?
So I think we need to step back a little bit and look at what is the purpose of a stablecoin, right? So to me, the stablecoin utility is the biggest use case. It's not an end in itself. You're not going to look at this as being an asset to invest in as much as you look at as utility to deploy in other assets. So you may hold Bitcoin as digital gold. You're unlikely to hold a stablecoin as a digital dollar. Right? So you will use that for some transaction, for payments, for remittances. So insofar as it's a tool, you need innovation. You need new companies to claim the space because that's what's going to foster this green shoot economy for the digital landscape here. Second, you want to allow for an ecosystem of high value, high volume transactions. And we're playing globally, and you want to enable multi-currency transactions, right? Now, if I take those as a presumption, and by the way, I share all the love for Liechtenstein. We have an ETN business that is regulated out of, our prospectus is out of Liechtenstein from the FMA blessings here, and we obviously can market and promote across the EU. But when it comes to the new MICA regime, I think it's more protectionist than it is allowing for everything I just talked about. So why? Well, why would you have a limitation on transactions per day? Why would you have punishment of 12.5% annual turnover if you do something wrong? That's going to encourage the likes of SocGen to do a stable coin, but not the new SocGen that's still being thought about in someone's living room. You need to create the ability for new companies to claim the space and have the right transparency around it, have the right audit so you know you're 100% collateralized. Because the stablecoin, as we all know, the pegging is easy. That's 1-to-1. The real question is, what are you backing that by? Right? What is the collateral for that? And in that sense, MICA is pretty decent because it allows for fiat-backed, asset-backed, or some hybrid. What it's missing, however, is that it should make it safe for companies to start, creating audit trails for the collateral, allowing for multi-currency usage, not fostering a euro one only, and not having these like artificial ceilings that basically will encourage large companies to participate, not young ones, right? So that's kind of like my overall statement. I think it's more protectionist than it is not, and it'll if you want to have this protectionist environment with clear guidelines, okay, I mean, even if you buy that, then create the corollary of that and create a European-wide sandbox. So you know what? We know that this is not going to be encouraging young entrepreneurs to take a chance and build the next Tether. Because you have all these, really arguably onerous requirements if you want to build a good stablecoin company that's going to be globally dominant. So we'll give you this protected environment that's the flip side of this, arguably more protectionist environment, so you can grow to a certain size, get critical mass, and then you can be more compliant of MiCA. And we're missing that flip side sandbox to make innovation more possible.
I agree to a large extent. I was informed that there is a sandbox environment in the European Union set up, but it's more about assisting projects in working with blockchain solutions. So that there is not a specific case where you can test yourself in small scale and then grow out, like in Singapore, which was very famous for that. Yeah. But don't you think that beginning with such a powerful technology and getting into a new age, having digital assets that refer to a asset and have a stable price, don't we need protection at the beginning to then scale up and think about it and make it more acceptable within the society and within the authorities?
Yeah, I mean, the question is who we're protecting, right? So if you look at stable coins, you're backing with some kind of collateral. The easiest one is fiat. I give you a euro or a dollar, you give me an equivalent digital version of that. So that's safe, but it's not very productive for the stable coin users because there's no yield, right? So that sticks with the issuer. And look at Tether, they made $4.5 billion in the last 6 months, by the way, the most profitable company per employee, and it barely existed 10 years ago. So, that's the level of innovation that can be brought with the right environment. So where it gets trickier is where you have crypto assets as a collateral. Those crypto assets can drop in value or go above. So you may be 100% collateralized one day, 80% the next day, which then breaks your covenants, or 120% the following day, which is then inefficient. You're over collateralized. So you want to avoid that if you can. You can do synthetics, algo-based, but then again, if in a down market, those pairs break, and you looked at Terra Luna as a famous case of a synthetic stablecoin where you do not want to go. So you do want to protect people against that. Yeah. The big trend right now is for real-world asset-backed stablecoins. And of course, the biggest play in the recent high-rate interest rate environment has been treasury bills. You're getting a 5% yield on a backing, so your counterparty risk is the same as a US dollar, i.e. the US government. The difference is a treasury bill gives you a 5% yield, the US dollar gives you nothing. In fact, you lose value in real terms due to inflation. So that trend for treasury bills has now grown out of that to other assets, so whether it's real estate, private credit, money markets, other high-quality RWAs which are low risk, high yield, but more importantly, uncorrelated to crypto. So you're not taking a risk on the crypto market, you're taking a risk on private credit markets or money markets, which are arguably safe, or US Treasury bills, which are arguably very safe. So what are we protecting? Who are we protecting? Are we protecting the asset collateral for the consumer? Are we protecting the company so it doesn't go insolvent? In either case,
By giving rules of saying you need collateralization to match and meet those covenants, you're good. And then forcing them to have audits to make sure that there is 100% collateral is good. But by limiting what kind of currencies they can collateralize and create only euro-based stablecoins and not dollar, that's where it gets wrong. By having these transaction volume restrictions, that's when it goes wrong. Because then why will the big guys want to come here if they're limited to doing large transactions? And you want globally dominant players.
That's a fair statement. So I would say we still have a lot of chances to make the framework better in the future. But touching upon your point, I mean, to get stable coins, we need to have like a institution, a CASP that is helping with the exchange of assets. So we go over to Monty. And what is really interesting for me to know is, what do you think, what differs the CASPs from traditional finance, and where do you see the future of exchanges within the European framework?
So crypto exchanges are core infrastructure of the blockchain and crypto industry. But to really understand what's happening right now, I think we need to take one step back to have like an overview of like history of technology. I often say that blockchain is to the money what email was to the letter. So it's an introduction of a new technology which is fundamentally changing the financial and the monetary system as we know it. That's why I think Liechtenstein had been pioneering this thought about we need a regulatory framework. But I also see that there always had been like generations and like waves of different pioneers in technology. So as a technology investor and entrepreneur, I've seen many ups and downs. And there had been always a first generation, second generation of kind of companies. And I still vividly remember how Facebook came along, because this was a time, 2007, where actually the social media market was dominated by large players. MySpace, Friendster were there, right? So these were the pioneers of it. But then somebody came and like made it differently, had a clear USP, started out. And this we've seen with everything, ISPs from AOL, CompuServe, to now what we have, the internet connection. And similar, it's happening now with this fundamental technology as a crypto exchange, you know, the in and out of how do you get your fiat, your euros, your Swiss francs into crypto in and out, how do you trade on a centralized, like trusted platform. There are plenty of innovators out there. And if you track the current size of crypto exchanges, there are, I think, more than 1,000 on CoinGecko at the moment. 1,000 crypto exchanges. Trading is over $100 billion in trading volume just yesterday. You know, we have 2 trillion market cap at the moment, and so it's substantially like financially impactful. So that's why nobody can ignore it. No government, no central bank. Everybody is investing in kind of this key framework of exchanging crypto assets and digital assets. But these generations will change, and I'm a true believer that you have to play by the rules. You have to build crypto integrity, where not only there's regulation, but there's also founders and teams who take it really seriously and want to build something sustainable. And that's why we believe we are part of this kind of second generation of crypto exchanges. Really, now 6 years in the making. We're 3 years regulated here in Liechtenstein, so we have a kind of an unfair advantage for MiCA, what is coming. And now looking at Europe for the bigger picture. It is now markets and crypto assets regulation, MiCA coming, and it probably will slow down innovation. So I don't think the sandboxes and this like pioneers will be probably coming out of Europe. They will be somewhere else, right, where they can do everything they want. But here we want to create a financial powerhouse, and it's mainly like driven out of Liechtenstein as well, where we can build access to Europe and build a framework where the users are kind of having a safe player, who they can trust, where they know the funds are fully segregated, that they play with certain rules, and they probably won't be the most exciting company, but a stable and reliable player, similar to what you're used to working with a bank, right? So, and there's a famous quote I put in my book, Blockchain Banking, by Bill Gates, who said 1993, banking is needed, banks are not. And that's why we're here, revolutionizing finance as we know it.
A very, very great statement. This was actually something I was heading for. So giving us a little bit of insight. Are you frightened by institutionals like banks taking over the exchange business, or do you still see like a market in the future, just under Mika, where an exchange has something to offer against the bank and would still be in existence on future markets? Or do you see the institutions taking over on exchanges? What is your feeling about that?
I think there will be a balance of power. So of course banks are important also for us. Clearly we have many banking partners, and there are also partners who are pioneering. In Europe, I would say Revolut is leading the game at the moment. Speculations about their own stable coins. You can actually buy LCX token, our utility token, in the app in Revolut as well, and they have hundreds of millions of users, really like mass market. And then we're looking, Liechtenstein has a huge US dollar payment rail, for example, where all the banks here are depending on middlemen. And this will change completely there. So there's a lot of innovation happening there where middlemen are probably not needed anymore. And then there's the category of exchanges, and I think this will be, like for us, LCX, we offer a variety of assets. So from paper, like meme coins to Bitcoin, Ethereum, and everything. So, you know, we offer everything users want, which are in a framework which we're allowed to do. And there will be, like, you know, hundreds of exciting tokens. You want to be part of the next kind of crypto revolution project. And that's why, yeah, I do see this like balance of power in different platforms.
Good to hear, good to hear. So if we spoke about markets and about volume and about users and everything is increasing, I, as a compliance guy, I always hear about fear, risk, and regulation. So my question for Salan would be, how do you interpret the risk, or do we really need to have like a sound blockchain analytic software in place? And can you give us a little bit of feedback? Do you see like crimes, threats, and just let us feel what you see on a daily basis and how blockchain analytics is evolving?
Yeah. So, really good question. I think one thing that's really powerful about crypto in general is that it is pseudonymous, transparent, right? And what this means is that when there are criminal activities that are happening, we have the ability to understand what's going on. Unfortunately, 2 days ago, a very famous journalist in Cambodia was arrested. The interesting thing is that this journalist was very prominent because of their work on child sex abuse, on human trafficking, and despite clearly being basically a net benefit to society with his investigations into crypto criminality, he was arrested, right? So the question is blockchain analytics important? Is it important to have an understanding of what's going on? I mean, undoubtedly. The other element to this is there is the forensics element, but there's also just the interesting financial element. For example, stablecoins, a great topic that we touched on previously. Celo, which is a network that I wasn't very, very aware of. I mean, obviously I'd heard it by name. It just overtook Tether as the most prominently used stablecoin by number of addresses, right? So the Celo blockchain now has the most active users. And I understand that active users is kind of a false metric. It doesn't really mean that, you know, there are people day in, day out using Celo for stablecoin transfers. But again, without the understanding of what's going on in network activity, analytics as a whole, not just compliance and forensics analytics, but analytics of the space, you don't come to understand how integral these technologies are to basically society, right? The reason that Celo was able to become so prominent was because of its use in sub-Saharan Africa, primarily. So Tether is typically used in Southeast Asia, or that's where it's very dominant, but Celo is very, very dominant in sub-Saharan Africa. So yeah, I think there's a lot of these types of insights that you can glean from really studying blockchain transaction activity in depth. And you asked this, you framed this in a very nice way. Being in sales, I must say that you do need to have a great tool to be able to understand exactly what's going on, so that we do all of the heavy lifting for you.
Absolutely, and I remember dinner we had just recently, and we spoke about how important it is to have like a very sound framework in terms of blockchain analytics, because speaking of adverse media, of data pools, and I think behind the scenes it's all about gathering data, buying data, understanding data, collecting everything you can find about a person. There is so many sources that is at the end of the day not reliable. Yep. So you cannot just collect, you need to really work with the data. What is your insight on that? Did that like evolve? Is there something coming up where it is more reliable, or would you just say, oh, it's still very, very complicated to get the right data in the right spot? And
yeah, really great experiment that's been very, very successful is Arkham Intelligence, right? Arkham Intelligence is, I guess you could say, a competitor to us, but we don't really compete because what they do is they open source intelligence, right? Anyone can submit, and you receive a bounty for submitting attribution around an address. What this means is that they have a massive data pool. They're able to say who this belongs to, who this doesn't belong to. In the case of regulated institutions, in the case of law enforcement, in the case of things like the journalist in Cambodia, it is good to have these insights, but also you need to be able to stand up in court, right? You need to be able to say, this is exactly how I got this information, and this is how it's verifiably true. Otherwise, the incentives start getting mixed. So what we believe at Crystal is that it's integral to have human intelligence, OSINT intelligence, and to be able to verify all of the intelligence and attribution that you're gathering, so that if it comes to law enforcement, if it comes to a court case, that you're able to assuredly say this is what's happened, and you don't put the wrong people behind bars.
Super. So coming back to the stable coins, yeah, Bandeep, please.
Yeah, look, let's look at this from a practical perspective, right? We all know the trends that are in the crypto world, right? So it gets blamed for things, and people say to me it's used for like money laundering. I'm like, well, yeah, so is the US dollar. Does that mean the US dollar bad? No, right? What is it, like 80% of US dollar bills have cocaine traces on them? So like, go figure who's using what for what. So, right? So you got to like separate out the tool from the actual and from the means from the end, right? If you look at where the world's going to go in the crypto world, regardless of whether you believe it or not, the forecasts are growth in RWAs, i.e. tokenization of real-world assets, and growth in the use of stablecoins. And they're correlated. Because you can't tokenize an asset unless you have a stablecoin to then market it. You're going to have a price-stable value for that tokenized asset. Yeah. Now, we can tokenize every damn thing in the world. I can tokenize my shoes and your coat. That's all cool. That's easy. That's the easy part. The real question is, how am I going to distribute this? Who's going to access those tokenized assets? If the idea is to unlock value and access a wider financial purchasing power, you want the person in the Philippines to buy a T-bill they could never buy before. Right? That's the goal. Right? That's what we're tokenizing. It tokenize for tokenizing sake doesn't do anything. Right? So, insofar as you want to have a globally liquid system for accessing a whole slew of tokenized assets now being available to a whole set of investors, ultimately, this is a volume play. Right? This is what your exchange world would be. You want ultimately high volume with a decent margin, not commoditized. And borrowing a few quotes from taking a lead from your Bill Gates one, go big or go home, right? You want to go big. And the other quote I love from one of the guys who founded Sun Microsystems many years ago called Bill Joy, who was the CTO. He said, assume innovation occurs elsewhere. Right? It's not going to happen necessarily in your firm or your backyard. So you want to be able to encourage that elsewhere coming inward. It's not going to be a SocGen stablecoin that's going to be innovative. It's going to be a startup in Liechtenstein or Luxembourg or somewhere else. So if we want to have a worldwide market, what does Europe offer in that regard? Right? Europe offers stability. You have a great example of GDPR, which has become almost a world standard, talking about data. Let's create those repositories of trust, which is the most deficient thing in this world, which is why you have crypto, because it's a trustless system, and let the data integrity be unquestionable, because it's a European domicile data set. That's a hugely powerful thing. People will use that in court. People will use that for transaction references. But don't limit the ability of companies to grow by putting these artificial ceilings and silos that they can operate in. You have to go for a worldwide market, because this is a global play. And if Europe wants to encourage growth, you've got the whole world to access in terms of this new paradigm that's causing instruments to be created that were never possible before. That's the goal, not protecting and holding back vested interests. You want to unleash the power that's coming out there with tokenization, with RWA. So my philosophy is, if it doesn't happen, and yes, I can buy the sandbox argument, it's the other. Today, capital is really, really, really fungible and really fast moving. And so is talent. If you don't believe me, look at Britain post-Brexit. Moved. Yep. And if they thought that was not good enough, they just stopped the non-domicile rules, and they've seen more people come. Right? Christian Argemeyer just announced he's going to Lugano. Headline news. People move quickly. There's 200, I live now, I'm sort of very DLT, so I live in Dubai, London, and Toronto, and in that order. And the reason I do that is because Dubai encourages innovation. It encourages people to get there. There's 280,000 people from Britain who live in the UAE. Why? Because they move. People move. So if you don't allow for innovation and give the right protection / encouragement and, frankly, the right tax treatment, people will move elsewhere. It's not a lot of things holding people back today, because they get lots of other people shouting out to come to them, not just for economic reasons, but also safety. And that's if Europe doesn't buy into that, they will lose out.
Correct, but I would say that's the holy grail. And,
which is the holy grail?
Putting all things together you just mentioned is like looking for the holy grail.
But the best thing is Europe is so capable of it.
Sure, sure. I would say Europe is just about to start. We're going to try to put regulation on things that were worldwide, or where worldwide there were no large-scale solutions so far. So let's work on that, and I totally agree, and I'm very grateful for your input on that. Yeah. So I think we are all about to close the session, but I still want to have like one remark from Monty again, like putting things together. We have like the product, stablecoin, we have the CASP that is like exchanging things, and we have of course the blockchain intelligence. Monty, speaking of your business, do you see like stable coins rushing in and getting a bigger number in your business?
Well, you have to understand we are at the tipping point here in moment in time. With 2024, you and your team in terms of compliance have put in so much into the ecosystem, and people are willing to move. And I think a lot of people who are looking for integrity, crypto integrity, will be moving to Europe to build their companies. And now we are at this tipping point, because with MiCA coming, there's a framework which gives us a clear structure. It doesn't make it very easy. We're just in a process of pre-application of MiCA here in Liechtenstein. It is a big chunk of work, long documents you have to file, and it's complicated. So as a startup who wants to just build technology, it won't be the right place. But it's the right place to really bring this technology into like mass markets, and in a way that we can bridge traditional finance and blockchain innovation. And the reason why we are at this tipping point is that as of now, 1st of February here in Liechtenstein and 1st of January everywhere else in the European Union, everybody who doesn't have any MiCA license will not be allowed to operate. This includes stablecoins, crypto exchanges, a lot of blockchain offerings out there, these crypto asset service providers. Everybody who has some form of license at the moment, like TVTG, here, Blockchain Act in Liechtenstein, or France, Italy, or wherever, they will be able to still operate in this transition period. But then there's a hard deadline also. If you don't get licensed, you need to leave. You need to lock Europe down. And So far, we've not seen any enforcement action like we've seen in the US with the SEC, but I think this will change because they have put so much effort into this regulatory framework that they will protect it also. And looking at the 1,000 crypto exchanges, I believe that there will be only a handful. Probably Coinbase investing a lot, Kraken, LCX, I don't know, a few others probably in Europe. But let's say 10, not 1,000. So for us, it's a turning point. And let me give you a short last example. Back in 2017, I was sitting in Zug in the heart of Crypto Valley. And I always say Crypto Valley goes from Zug to Liechtenstein. You know, it's a valley of mountains connecting it. And I was writing down different business models on a napkin. So this is the famous napkin strategy where we put down the key building blocks of LCX and said we need this fiat gateway. We need exciting coins to be traded, but we want to do it in a compliant, regulated environment, still be able to innovate. So we put down the couple of thoughts, and it was like 11 p.m. or something, really late. I said, I should go to Liechtenstein and talk to some guys. So I sent an email to the CEO of Bank Frick, Mario Frick, and said, we should meet tomorrow. And then I reached out to Prince Michael, who's also speaking here of Liechtenstein, who's a great advisor and also policymaker in terms of where like Liechtenstein stands, and also reach out to him. And you know what? We got the meetings immediately. Next day, I was taking out my napkin on the table, said, Mario, here we need to speak about how to do business in Liechtenstein. We spoke to Prince Michael and everything. And so the point I wanted to make is Liechtenstein is open for business. It's small, agile. You know, we can call up the Financial Market Authority. We have the numbers that are open to that. And that's why I'm super excited about being here. And it's a great, great hub. And I'm excited to look into the rest of the day of Token Summit. Really, yeah, good to be here.
Yeah, thank you. Bandeep, do you see exchanges to be your biggest partner for your stablecoin, or would you think of peer-to-peer trading?
Look, I mean, I think ultimately people will go to exchanges because they want the fungibility, right? You need the liquidity pairs. You need to convert your stable coin to USDC, USDT, BTC, ETH, or just fiat. And exchanges will always be, especially as crypto goes mass market, the mindset of people who are not crypto is go to an exchange, right? You go to an exchange to trade, so exchange. So I think there's always going to be a role for that, and there's going to be a diversity of different players that allow for that.
Thank you. And Salan, you get the worst question ever. As I was involved in a paper according to risk and national risk assessment, stable coins are like highlighted for sanctions evasion.
Yeah.
So do you see like a certain volume where you say, okay, I can fully cover that argument, or do you have arguments against that?
Or is that just being used by governments to promote the CBDCs? Because they can then audit and trade, they can track it down, right?
Thank you. You're
I mean,
really nailing it.
The honest truth is that sanctions don't really work. I don't think that's any surprise to anyone, but you see, you know, Garantex is a massive Russian exchange that was sanctioned, and days after the sanctions dropped, our peers in the industry and ourselves, we thought, okay, activity has stopped. Another 12 hours passes and we realize, oh no, they actually just moved offshore, they moved to new exchanges, they started moving funds in a different way. So regulation only works to a certain point. Often it's much more punitive than it is actually effective, and it's clearly integral that we don't only craft regulation to appear as if we're doing good, but to actually have an impact on the economy. That being said, I think all of this is overblown, and the illicit activity that happens in crypto is gives us a you know, kind of a bad lens. But in truth, because of the transparency, we're able to see so much more of this criminal activity that's happening that you simply wouldn't be able to see with cash.
I fully agree. So thank you all very much for that brilliant discussion. And as a takeaway, I would say there is a lot of things that come towards us, a lot of tasks we need to face and we need to work on. And I think Liechtenstein could be really a great hub to get things done, because we are small, we are agile, and maybe we get there, what you mentioned about Dubai, but in a more acceptable framework for Europe. Super.
Fantastic.
Thank you
very
so much.
Thank you very much, folks. We're going to dive into the next conversation right this way. Fantastic, wonderful, amazing, extraordinary, lovely, beautiful. Right.
Hey.
We've got a lot of content out of that panel. The next conversation is going to be led by a good friend of mine from Signum Bank. Signum, of course, is a bank, and oftentimes when TradFi, crypto come together, people like to use the analogy of a bridge, which is cool, but actually things are much closer than that, and that's going to be the conversation today, hybrid finance. So please welcome Aliyah Dasgupta from Signum Bank. Aliyah, jump on out here when you have a microphone, because that's going to be important. Meanwhile, those of you who are with us, I strongly encourage you, if you're in the back sitting somewhere, come have a seat here in the front, because that will be important right after the panel when I tell you about something that you might find. Ricardo, feel free to jump right in the middle. I know the seats will be very comfortable for you as well, yes. I mean, you might even get a chance to ask a question, and I'm sure you will have lots of questions, right? That's good, that's good. How many people, I think this question was asked already on the main stage, but some of you
to implement all of the new regulatory frameworks.
Super interesting. We're kind of barreling towards the end of our time, right? And I have a couple more questions, but I would love to also look into the audience and see if there's anybody who has a question for one of our panelists, and kind of make use of the fact that this is a smaller group. We have a little bit more, space to kind of lean in and ask the question that maybe you have in your head right now about what these guys are both working on. Is anyone with a question? And if not, I will ask my maybe last one. We're looking at this kind of hybrid finance, right? And you guys work on slightly different aspects of it. What are you most bullish on for the year ahead? Where do you see the market going, and where do you see your product offerings going as well? So
Yeah.
Two questions. One is, what is your product going to look like next year? And second is, where do you think the market is also going?
Yeah. Can I start with the second
Please.
one? Okay. I'd like to talk a little bit about the ETF's approval in the US. So the approval of the spot Bitcoin ETF in the US has been an exceptional milestone. It's a big victory for crypto, and it has fully legitimized digital assets as this excellent tool for portfolio diversification to your standard 60-40 equities fixed income allocation. And we are finally seeing that the confidence in the asset class is back. This time last year, whilst we were still in anticipation for the ETFs to launch, it was still very low sentiment.
We don't have a lot of time, so
Sure.
Second question as well.
So it was this time,
Yeah.
this time last year, whilst it was very difficult to raise capital, and it was very sort of uncertain how the industry is going to evolve.
Yeah.
So the approval of the spot ETFs, we've seen more than 50 billion of dollars invested into the Bitcoin spot ETFs alone. The Ethereum ETF showed more than $1 billion volume traded on the first day, which means that now crypto is here to stay, which now actually poses a couple of sort of questions and sort of really interesting side effects. So side effect number one is that this sort of bull run, if we're looking into the future, this bull run has been driven by institutions. It's the institutional inflows into these ETFs and wrapped products. So we still haven't seen the retail coming back. So the previous bull run was driven by the meme coin mania from the retail side, and we still haven't seen this. So the market and most of the volume is now concentrated in the top coins by market cap. And of course, we're just yet to see the retail to come back. So how do we see this market evolve? There is a lot of talk about stablecoins.
Yeah.
And stablecoins are obviously growing, but what I'm hearing more from my institutional clients is that they're looking for yield.
Yeah.
So we are coming to Deribit as the yield-bearing collateral. We're going to be present at multiple exchanges, and we're going to grow both in the centralized exchanges space, but also we're going to grow through all of the DEXs, and looking forward to more lending and borrowing marketplaces as a collateral. Lending market completely was eradicated after the FTX, and it seems like we're coming back.
Fantastic. Sid?
Yeah, I think there's a few different ones. Like, definitely one is like stablecoin issuances and like, their adoption. Another is like, I feel I'm like looking forward to lower valuations and like, more consolidation in the market. And there's much more maturity now, like moving from like, for example, like VC investments or like direct investments to providing liquidity into protocols using infrastructure from like institutional investors, like family offices as well, right? So that is something like really I'm looking forward to, because we've been running like a decentralized AI infrastructure as well, right? And providing liquidity through that. That has been generating more returns than like actually like investing into the protocols itself, right? Like, so this maturity of like, not crazy valuations and slow and steady growth, like I think that is also something.
Nobody wants that. We all want to speculate and see the hockey stick.
Yeah, but like the thing is like the speculators are already there.
I'm kidding.
But
I'm kidding.
yeah.
That's not my view. Sorry.
Yeah. No. Of course. Like, the speculative aspect like is the most fun part of this, right? That's a never boring day in crypto, right? But yeah, like infrastructure with liquidity provisioning, like that maturity is also bringing in more like investors and giving them options to not put their assets at risk and still be able to make the best of like the DeFi space basically, and provide mature growth to the space itself. Yeah, so I'm like really looking for that.
So optimistic. I love to hear it. We had one question from the audience, and then I will give up our stage. But please, yes.
So I'll split the question into two very quick questions. So, and I have the benefit of knowing both Katja and Sid, and I've seen them across multiple countries. So if you were starting a business today in crypto, where would you locate? Where would you domicile it? First question. And second, when does Bitcoin hit 100K?
We don't offer investment advice here.
Perfect. We're in a decentralized world. It doesn't matter.
Okay.
You wanna? Oh yeah.
You go ahead.
Yeah, I think it also depends on like what sector of crypto, right? Like, whether it be gaming or if gaming, I think Japan or Korea is like really amazing. Like, the digital IP that is like coming over there is like really amazing, right? For finance, like maybe, should I say Liechtenstein? Like to earn the favors, maybe, I mean, I think Liechtenstein is making like really great progress, like, especially around MICA. And I think like UAE is a really great place in terms of like flexibility and like, and the time that you want to figure out things, like especially if you're a young startup, right? Like it's a great place to get started. But as you mature, like moving to like having operations and partners in Liechtenstein, UK is really great. 100K, like I think I'm betting on like Jan, like, but I'm not going to be selling, like, I mean, like that's like the best asset to hold, right? Like, so I'm just waiting for like it to keep growing, like so I can borrow against it. But yeah, like
spoken like a true degen, huh?
Yeah.
Katja, you want to answer it?
Well, I'd like to think about some ingredients that I need to build a successful story, right? And I'm looking for funding, and I'm looking for talent, and I'm looking for ways to go to market.
Yeah.
So it is not really about a jurisdiction or a place. Now we have teams which are very much decentralized. You can bring together people from all sorts of countries, great builders, And for example, the Ethereum community, it's very strong. You have the ETHCC, going from Paris to Brussels. I was speaking at ETH Milan last week. This week I spent in Zug. Actually, I've just arrived from Zug. Crypto Valley seems brilliant. I love the fact that you have this combination of talent and also resources, but also you need this favorable regulation and ability to market your products, ability to distribute your products. I saw sort of like a Bitcoin payment card at the railway station in Zug this morning. I was very impressed.
It's everywhere here in Switzerland, and in Liechtenstein as well, I suppose. But no, at this point, I see Lucas frantically signaling me that we are done with our time. But thank you both so much for your insights this morning. A big round of applause for these great panelists.
Yeah. Please do visit my workshop later today. I think it's around 4:30. And I'll be talking about capital efficiency, your operational setup, and how can you essentially access crypto in a safe way and the most efficient way.
Perfect. Cool. Thank you so much. You've been a fantastic audience.
Thank you, Aliyah, Kat, Sid. Ladies and gentlemen, we've come to the next most favorite part of the day. Don't get out of your seats yet. Please sit back down. I told you to sit back down because what I have been told is that there is something special for some special person who is sitting perhaps in a special seat, and that special thing is an invitation to the VIP dinner tonight at a Michelin star restaurant here in Vaduz. The invitation you might find underneath the chair that you are sitting in. So don't move, don't reach, don't search, just under your own chair. If you find an invitation underneath, you are invited to join. If you don't want to come, that's fine. You don't have to check it out, but if you've spotted it somewhere else, no cheating, no cheating. You have to come back and then sit in that chair later on. Anybody find it? No. Well, that's your fault, yes. You were going for the coffee, which is the next thing, coffee break. Please come back and join us at 11:10. Come back and join us at 11:10, but in the meantime, get yourself a cup of coffee and get fired up for the next round. Conversations. Podcast at Bluemax, so that's more one-on-one. Ask questions.
Yeah.
This is a bit more. Yeah. It's a bit more stage, whatever. But yeah, it's cool. Going well. Busy. Also with Mika coming up, that's a focus for us too. So. Yeah. So there's a lot of streams going on at the same time, but yeah. And yourself, keeping busy and. Yeah. I did. You did. I haven't done it. Let's do that though. Yeah, in the next few weeks or something. Yeah. Yeah.
And otherwise, if you walk up Bahnhofstrasse,
yeah, where are you at exactly?
right above the swan shop.
Yeah. Okay. Right there.
So
Well, that's easy.
just knock at the door.
Okay.
Doors are open.
And you're usually in the office.
Maybe next week.
Yeah.
Otherwise, somewhere else.
You're having another coffee. Yeah.
When they also said that the doors are open, is that point?
Oh yeah. Well. Good. Great to see you. See you around. Good. Yeah. Oh yes.
I normally don't happen to see the envelope behind the chair in front of me.
So.
And I was going to let it sit, but
Yeah.
I'm looking for a job. It's kind of an important time for me.
Sure.
So do you think my sufficient counts or will it not?
I'll let it go. Yeah.
Okay, thank you very much.
Yeah.
Appreciate it. And so I used to work at the fund here and it was their problem, not mine. So
Then please join us tonight. Yeah.
perfect.
Good.
Thank you very much and good moderation.
Thank you. Hopefully also good content. Yeah. I the first panel was a little bit longish. Really are into the topic. And sometimes talk around the subject quite a bit. But of course it's a big topic.
And of course it's a favor to the people who get cut off. Like
Yeah.
it helps them.
Yeah. Good, well, enjoy.
Yeah,
Have
see
a
you guys.
coffee
All
and
the
see you later.
jedes Mal, wenn die Veranstaltung ist, kannst du nicht einfach durchmarschieren. Das ist nicht sehr intelligent, das war vorher besser.
Ja.
Okay, ja, dann gehen wir noch kurz raus
Ja.
und kommen dann in 5 Minuten oder so wieder rein oder in 3. Erstmal muss ja überhaupt jemand da sein. Das war vorher auch schöner.
Lovely to meet you.
Hello,
Ian.
nice to meet you too.
Yes.
Yeah, Constantine.
Yes. Okay, Ian.
Yeah, we have the time to talk after.
Sure.
Do you mind if I set you up?
Yeah.
With a mic. Is it okay if you take that off, or would you rather just
No,
have
it's a
it?
bit complicated.
Okay, then I'll just have it through the outside. But could you have this in like a?
Do you have a microphone like that? No.
Oh, do you want the microphone like that?
No.
I can get you a microphone like that.
Let's do that.
Okay.
Thing.
It goes through the back.
So you grab that and you put your finger in there.
In the front, that will be in the front.
No, in the front.
Then when you sit
Oh
down.
no, are you gonna sit down or no? No.
If
you're gonna
I
stand
can
there.
sit, I can sit, but yeah, I would like to sit.
Would you like to sit?
How is the
Stand up.
rule?
Stand up.
Yeah,
Usually it's
I
stand up.
asked.
Yes.
Yeah.
To the coffee break. Hopefully you got a triple espresso or even more, because the next topic I can guarantee is going to be very focused and very interesting in a good or maybe a bad way. Welcome back to stage 2. We had 2 panels this morning already, and now we're going to have a special address on regulating the unregulatable crypto crime and the future of global law enforcement. Maybe not something we'd like to think about just every day, but of course, a very timely subject. I have some bad news before we get started, and that is that the special surprise, a ticket to tonight's VIP dinner, was already found in the morning session, so that's it. However, all of the seats here in front are the same price and just as comfortable as they have always been, so I invite you to step up and take one. I won't ask you any personal questions if you come closer. Don't worry. I'd like to welcome Professor Dr. Konstantina Papatanasiou from the University of Liechtenstein, and she has some very interesting insights about regulating crypto, even if it might seem unregulatable. Thank you.
Yeah, thank you very much for the introduction. Good morning to everybody here who is physically in the room, but as well to everybody is looking to us through internet. I am very pleased to have the opportunity to speak at this important event where the future of cryptocurrency regulation is at the forefront of our discussions. As a professor, I write everything so as to stay on time. You are already very familiar with the markets in crypto assets regulation and the goals to be followed. From my part, I want to look at a different side of this topic. In the next around 19 minutes, I will focus on the darker side of cryptocurrencies, the ways in which crypto is used for crime, the challenges this creates for law enforcement, and how we can adapt to these new challenges. But let's start by recognizing something fundamental. Cryptocurrency is a double-edged sword. On the one side, we have innovation. Blockchain technology decentralizes finance, gives financial access to people without banks, and reduces transaction costs worldwide. Cryptocurrency offers opportunities for economic inclusion and is a new frontier, we can say, for digital finance. On the other side, the very features that make cryptocurrency attractive, decentralization, anonymity, and easy global transfers, are also what make it attractive for criminals as well. Ransomware attacks, drug trafficking, money laundering, and terrorist financing are just some of the illegal activities enabled of cryptocurrencies or by cryptocurrencies. In 2022 alone, around $20 billion in illicit funds flowed through cryptocurrencies. This is a massive number and shows just how serious the challenge is for law enforcement agencies everywhere. So why is regulating crypto such a monumental task? First, anonymity. In traditional financial systems, banks and institutions can monitor and report suspicious activities. In crypto, as you know, transactions happen peer-to-peer without no intermediary. Cryptocurrencies like Monero take it even further by adding privacy features, making it almost impossible to trace who is behind a transaction. Second, decentralization. Cryptocurrencies operate on decentralized networks, meaning there is no single entity in control. There is no central bank, no government oversight, and no central authority that can enforce compliance. This structure is the core philosophy of the crypto, but it also makes traditional regulatory methods a bit ineffective. Third, global reach. Cryptocurrency knows no boundaries. A transaction can start in one country, pass through another, and end in a completely different part of the world in just a few minutes. This global nature makes it nearly impossible for individual countries to regulate it on their own. Finally, there is fundamental tension between innovation and regulation. Cryptocurrencies and blockchain offer immense potential for financial innovation. Should governments crack down on the industry to prevent crime, or should they focus on fostering innovation while encouraging responsible use? That is the question. Governments and law enforcement are not standby. We've seen attempts around the world to bring crypto into a regulatory framework. Here in Europe, MiCA is a significant step forward. It aims to standardize the regulation of digital assets across the European Union. According to Recital 95 of the MiCA, it is important to ensure confidence in the markets in crypto assets and the integrity of those markets. It is therefore necessary to lay down rules to deter market abuse for crypto assets that are admitted to trading. The regulations aimed at preventing and prohibiting market abuse in the context of crypto assets can be found in Title 6, Articles 86 to 92 of MiCA. In particular, 3 crypto-related prohibitions are outlined. The prohibition of insider dealing in Article 89 MiCA, the prohibition of unlawful disclosure of inside information in Article 90, and the prohibition of market manipulation in Article 91 MiCA. For example, under Article 91, paragraph 2 of MiCA, market manipulation includes activities such as entering into a transaction, placing an order to trade, or engaging in any other behavior which, first, gives or is likely to give false or misleading signals as to the supply of, demand for, or price of a crypto asset. And secondly, another example, secures or is likely to secure the price of one or several crypto assets at an abnormal or artificial level. And then we have Article 86 MiCA, which describes the scope of the rules on markets abuse. According to paragraph 1, this title, the Title 6, shall apply to acts carried out by any person concerning crypto assets that are admitted to trading or for which a request for admission to trading has been made. Paragraph 2 says that this title shall also apply to any transaction, order, or behavior concerning crypto assets as referred to in paragraph 1, irrespective of whether such transaction, order, or behavior takes place on a trading platform. And very important now, according to paragraph 3, this title, that means all these articles mentioned before, shall apply to actions and omissions in the Union and in third countries concerning crypto assets as referred to in paragraph 1. The reading together of the 3 crypto asset related prohibitions, that means prohibition of insider dealing, prohibition of unlawful disclosure of inside information, and prohibition of market manipulation, with this Article 86, results in their extraterritorial application. The scope of MiCA extends, I would say, effectively worldwide. That could become very problematic if it were to lead to universal applicability of criminal provisions. That would be a problem from a point of view of international law as well. Now you may be asking, where can relevant national criminal provisions be found? For Liechtenstein, there are criminal provisions in Articles 26 till 35 of the law implementing MiCA in Liechtenstein, which is currently in the legislative process and is scheduled to come into force on February 1st, 2025. In particular, Article 26 punishes the violation of confidentiality and trademark protection. Article 27 addresses the unlawful disclosure of insider information even in case of gross negligence. And Article 28 penalized market manipulation even when committed with gross negligence as well. For example, an insider becomes liable under Article 27 if, using insider information, he or she directly or indirectly for his or her own or another's account acquires or sells crypto assets to which the information relates, cancels or changes orders for the acquisition or sale of crypto assets to which the information relates placed before obtaining the insider information, or submits, withdraws, or changes bids to which the information relates. Besides that, of course, Article 31 regulates administrative offenses, meaning actions that are sanctioned by the Financial Market Authority, not by a court. So unlike the genuine criminal offenses outlined in Articles 26, 27, 28. Even these efforts, a global regulatory framework is still out to reach. Law enforcement agencies like Interpol and Europol are working together more closely than ever before. Criminals will always look for jurisdictions with weak enforcement or poor oversight. Decentralization allows them to exploit these gaps. So what can be done? Law enforcement is starting to adapt. New technologies are being developed to help track and trace illicit crypto transactions. Blockchain analytics companies like Chain Analysis are helping law enforcement agencies follow the money. These tools analyze blockchain data to detect patterns, identify addresses linked to criminal activity, and even de-anonymize transactions under certain circumstances. For example, just last year, United States authorities seized over $2 billion in Bitcoin from a darknet marketplace. This was made possible through sophisticated blockchain tracking techniques that law enforcement hadn't even imagined a decade before. Artificial intelligence and machine learning will also become very useful tools for tracking illicit crypto activity. But technology alone isn't enough. We need greater cooperation between governments, law enforcement agencies, and the private sector. Crypto exchanges, for example, are key players in preventing illegal activity. Many exchanges are now required to implement KYC and AML procedures, but compliance is inconsistent because some jurisdictions impose strict rules which others have almost none. A coordinated global effort is essential if we are to address this issue effectively. The road ahead is anything but easy. We are witnessing a technological arms race, I would like to say, between criminals and law enforcement. As law enforcement gets better at tracking and seizing illegal funds, criminals find new ways to stay ahead. Privacy coins, decentralized exchanges, and mixers like Tornado Cash make it even harder to trace transactions. Furthermore, regulatory lag is a persistent problem. Governments and regulators are often 2 or 3 steps behind the fast-moving crypto ecosystem. Just as we implement rules of crypto exchanges, decentralized finance is emerging where there is no central intermediary to regulate. Finally, there are ethical questions to consider, already mentioned some minutes before. How far should governments go in regulating crypto without infringing on individual freedoms and privacy? In other words, how much regulation is too much? Should we sacrifice some of the fundamental benefits of cryptocurrencies, such as financial privacy and decentralization, in the name of security? These are difficult questions that will shape the future, not only of the cryptocurrency, but of the global finance as a whole. In an era where digital threats are becoming more sophisticated, ensuring security has never been more crucial, as it forms the foundation for trust in modern financial systems. I would like to remind you, we have DORA as well, and that is coming as well here in Liechtenstein in some months. As a professor of criminal law, one central question for me is how far can the argument of security go to justify and legitimize preventive measures? In conclusion, we are at a crucial juncture. Cryptocurrencies are here to stay, definitely, and while frameworks like MiCA are crucial steps forward, the challenges of regulating the unregulatable remain. The future of law enforcement will depend on its ability to evolve, to use new technologies, foster international cooperation, and strike a delicate balance between regulation and innovation. And finally, let's remember, while cryptocurrencies might be unregulatable, there is one rule that always applies, no matter how decentralized or anonymous. Our internet provider still wants to be paid. Thank you very much for your attention, and see you soon again. Ciao.
The audience, and it's probably not a question that you have heard before, but I'm going to ask you anyway. Since we had a bit of a heavy topic here, there are admittedly some problems or some challenges still with crypto, especially from financial crime standpoint. There are other things which may be more or less of a problem in crypto depending on who you ask. So my question to you is, what is the worst thing about digital currencies? Maybe not something you've ever thought about. Does anybody have a perspective on the worst thing? We often talk about the best things, what is great, what they can improve, what innovation can come out of digital currencies and blockchain, but what is the worst thing? Any ideas? Some people say energy consumption. Some people say, yeah, money laundering. Anything else? It's all good. It's all great. Fantastic. Wonderful. Amazing. No problems at all. Right? Yeah?
If I can say something.
Sure.
I highly trust in my currency. So I know if I have Swiss francs, I have Swiss francs in my wallet. I know it's there. It's not going to disappear. And if I look at digital currency, I would say this trust that the money would stay and keep the value.
So you trust the Swiss government much more than you would trust technology, the smart contract, or the project behind a token? Yeah, okay, that's a fair point. Many people have brought that point up. That's maybe something that is a perspective in Switzerland, or maybe system here in Europe is fairly simple. So the next panel discussion coming up in just a few minutes or a few seconds is actually looking at the good, the bad, and the ugly of digital currencies. And it's going to be moderated by Ingmar Zechlin, who I think is ready to step onto the stage and introduce the panel. Ingmar, over to you.
Thank you.
Yep.
Welcome, everyone. And I would like to I'm Boloda, the head of policy of the European Blockchain Association, as well Eugenio Reggianini, is this correct? and he's the head of growth. And also Yasser Hankia, who is the CEO and founder of SaveDroid in Liechtenstein. Welcome, all of you, and thank you for joining this discussion. So we are discussing today the digital currencies, the good, the bad, and the ugly. This is a promising title, so let's see where we end up, hopefully with the good. I would like to ask a first question also for our clarification. What are we talking about here? If somebody would like to volunteer explaining what, like, say, categories of digital currencies come to your mind when you think about that, because I think they have quite some different advantages, risks, etc., and considerations. So who would like to chip in first on this one? Eugenio?
Maybe myself, okay. Well, first of all, thank you, and nice to be here in Liechtenstein again. I would like to start with a step back from this specific introduction, because I think we are living in a moment of evolution and transformation, and so transformation of how economic value is transferred between people and between subjects which have different societal status, okay, administration, businesses, and people like us. So I think that as we are going into the topic of digital currencies, through the evolution of blockchain, through tokenization, the concept of currency itself has been extended, let's say, from the more institutional one to a more community-oriented form of currency, which can be associated to different tokenization strategy. So we may have currencies which have a fully legal harmonization with fiat, like CBDCs. We may have a form of private and commercial currency, like commercial bank money tokens or stable coins. But we, to be honest, through blockchain, we can't prohibit to communities which operates maybe DAOs to have their own utility token, which is not a currency in the sense itself of the traditional sense and of meaning, but it's still an economic value for the people which are involved in the community itself. So I just wanted to say this in my mind because it's important also to further distinguish the different types. CBDCs, which have different forms of setups, different architecture, and projects which are operated for maybe different purposes from institution to institutions. Electronic money tokens, commercial money token, which have, again, different stakeholders which are interested in the emission and distribution, and different than commercial purpose. And I would say more general purpose token, which still have the value of the currency, but just for a private arrangement amongst the people that are form part of a specific community.
So if I take this up and try to simplify it a little bit for the audience, and excuse my possibly misunderstanding in some cases, but basically you have the so-called CBDCs. I mean, most of you will know, but basically the central bank digital currencies. So this is what we have traditionally as cash. Then in some forms of digital, well, the digital forms are not really central bank mostly, but anyway. And so we have what is the state, if you simplify it. That is what you use to pay at the moment in most cases still. And then you have something that is a little bit similar, which is like e-money and so on, and often pretty heavily licensed by now. And then you have something that some people would call a currency, but officially and from the definition, it's not really a currency. Exactly. But it functions very similar.
It distributes economic value.
Yeah, exactly.
Right?
So you could call it a voucher in some cases to simplify it in the old world, and so on. So you have different layers with different interests. For example, of course, the state ones are, of course, highly debated, and the state and the politics are highly engaged in this topic. And then you have things which are close to that, which are more on the bank or community-driven or project-driven topics. And then you have something that is close to it, and some people would perceive it as a currency. And all these layers, let's say, are different and have to be viewed in a totally different way.
Yes.
Because also the users are different and the promises are different,
Yes.
right? So if we start off at that point, I mean, maybe somebody wants to intersect here and tell us a little bit about the state of what happens with central bank digital currencies for a starting point right now, because this is the first thing I think most people can relate to, like traditionally the euro, traditionally the Swiss franc, traditionally the dollar, and so on. Anybody volunteering?
Sure,
Yes, please.
I can jump. I think my mic is on. Can you hear me? Just fine? Okay. So, I mean, realistically, when you're looking at digital representations of state money or commercial bank money that's in digital form, this is all digital now anyways. It's blips on your screen. It's also blips on the screen of the central bank. But realistically, at the CBDC level, for retail use cases and for wholesale use cases, you're talking about two completely different end users. Wholesale CBDCs, largely for interinstitutional transfers, currency corridors, cross-border payments. Then you have retail, which is what the digital euro is supposed to be. So at the P2P level, at the POS level, so the point of sale between users, with different models, online as well, offline, two-tiered, intermediated, direct-to-consumer. So for this regard, like a direct-to-consumer retail CBDC would be if you or I held accounts directly with the central bank. Actually, a little bit of economic history for those of you interested. The first central banks in the world that started in Barcelona in the 1400s and in the Banco de Napoli in the 1500s actually had these things called Fede de Credito, at least in Napoli. And this was basically an IOU that a merchant held directly with the Bank of Naples. And this was the very early embryonic stages of retail CBDCs actually being direct to consumer. Things kind of progressed and changed as we got to the Reichsbank statutes in the 1850s, and then the Dawes Plan 1926 closed central banking fully to the public, really. And then you have at the wholesale level, we're talking about large multi-country projects, very broadly coordinated by different Bank of International Settlements innovation hubs within the MENA region in Southeast Asia. There's also an innovation hub based in Frankfurt now in collaboration with the ECB and the Bundesbank, which are doing wholesale pilots and experimentations. The Banque de France is doing them as well. Actually, they're testing wholesale CBDCs in proto DeFi settings, trying to settle products against the automated market makers using wholesale CBDCs.
I think there are three projects, right? Italy, Germany, and France.
Yeah. And then there's the Helvetia phase 1 and 2 also with the SMB, and they're very, very, very broad. The thing though is when you start getting down to the private level or the quasi-private level, things get a little bit complicated from a taxonomy perspective. And so when we're talking about digital currencies, I'll just give this example. If you have a stable coin, broadly speaking, a stable coin, because of its smart contract functionality, exhibits a transfer function. And the transfer function is indicative of a financial market infrastructure. And if you really want to get into the technical minutiae of things, like if you're a central banker and you're sitting in a continent, for example, or in a country with weak monetary policy transmission, non-existent fiscal policy, and you're getting de jure dollarized, and there's a foreign stable coin that's now kind of usurping your domestic means of payment, it may get to a point where you have to make the decision, okay, well, do I include this thing in my monetary aggregates? And if you do, well, then which aggregate are you targeting? Because a transfer function could put it in an M3 category, similar to a money market fund, could put it in an M1 category if it's being used as a form of payments. So even when you're talking about, like, at certain levels, everything outside of what's kind of dictated by the state or state fiat can disintermediate and disintegrate. And I also wanted to just briefly mention another category of digital currencies or coins. And I mean, this is the very embryonic, experimental, and volatile stage of this digitally native meme coin mania. And a lot of us laugh at this, but people are pouring millions of dollars into these projects. There's very large communities, and it's to me at least, it's self-referential funny money. But at the end of the day, so long as there is somebody willing to pay for it, ceteris paribus, it's going to continue to exist. And I think that there's also a large portion of the community which is really interested in these super experimental things. Now, whether these be digital tokens like runes on Bitcoin, or traditional NFTs, or meme coins on Solana, or whatever else, that's also part of the community that is still doing things largely separate from whatever's going on over here at the state level, at the commercial bank level, or at the level of the e-money providers. And so it's a very, very broad kind of Lopez.
No, obviously. I mean, most people here might have already touched base with some, let's say, private projects driven by communities, at least. And CBDCs, well, we will probably have to touch base with them at some point. Yeah, I mean, it's a broad array of topics. Let's look at also maybe a little bit of that community-driven aspect. Maybe you, Yasser, also want to comment on this.
Sure.
What are you seeing? Yeah?
As everybody already heard, right? I mean, this topic has a huge level of variety, and then you can go really down to nerdy stuff, right? There are many cryptocurrencies and digital currencies out there. My personal focus, I would always a bit set to make it a bit more relatable to real-life issues, is basically saying, okay, why, as an average person out on the street, should I be interested in digital currencies, right? So what's in it for me, actually, right? Because, I mean, may it be meme coins, may it be DAOs, whatsoever. I mean, sorry, guys, don't want to disappoint anyone, but that's a small, tiny, nerdy bubble, right? That's not gonna address the mass market. That's not gonna change the world, right? There's some IT nerdy guys are having fun with that, but that's not, at least not for me, what is bringing innovation to the table. It can be the goal-breaking thing to create trust, to create a real-life use case, and by that, really drive mass market adoption. And that's a bit how I'm seeing it.
Just before you intersect, we are basically with the speech opening it up a little bit, because I also have the questions to you. Number one, what can I do with all these things? And you're starting into that. And number two, advantages and risks as well, because it all depends, you know. I mean, you said I trust the euro. Some people here will debate that. They are using the euro. Exactly. It doesn't mean they are trusting the euro. Yes. Some people have a different perspective on that. Yes. But please.
I would just, two things. The first, I mean, from a wholesale perspective, if you're saying CBDCs, sure, I buy the argument. I think that this is something that banks and for cross-border payments definitely has an applicability and a value to drive down costs and integration and create some more harmony and common clearing and all of that stuff. When you're talking about from a retail perspective, like Key Bono at the end of the day, because if I'm a user and I have Google Pay and Apple Pay and people also have WeChat Pay on their phones and you can pay with cash and the merchant at the terminal where you're paying has to keep up with all of these different systems, if you look at the actual responses that the ECB is getting from everyday consumers and merchants asking about the central bank digital currency that they're planning to release, there's three things come up. Number one is privacy and traceability. Number two is what is this going to cost me as a consumer versus me as a merchant? And number three, distribution model. So the distribution model is going to be largely what you would expect from a commercial bank. It's two-tiered, meaning you're going to hold presumably your digital euro account at a commercial bank, because ECB has no intention of being the accountant. Now, they're going to settle and net and clear between the bank and the central bank, but not between you and the central bank. Okay, so you may be on the liability side of the central bank's balance sheet, but you'll never be on the asset side.
Just to clarify this for the audience, because you are very up to date on what the European Central Bank is doing with the euro. Because sometimes we get the question, also about data protection, does Mrs. Christine Lagarde then know all of our personal transactions? I went to the supermarket and bought this and that. There was a question in earlier stages, if then the central bank will know everything about your life.
I don't think that this is the
This
the
is
case.
obviously not
No, I don't think that the case is going to be that they're going to have some sort of panopticon surveillance view of what you're spending. They're gonna be able to see maybe what was purchased, but this is like double blind, and it also uses like a UTXO model, or will use a UTXO architecture similar to the unspent transaction outputs that the Shop 256 uses, which is kind of underscoring what's on your shirt. But ultimately, for the everyday consumer, like if you're planning to attach negative rates to this thing because you want to encourage it as a means of payment rather than as a store of value or medium of exchange, if it doesn't fulfill all three functions of money, legally speaking, it's not really money in that sense. It is a voucher. It's strictly some form of payment instrument. And fair, it shouldn't be forced on people. I definitely think people will use the digital euro once it's out, but marketing marketing. If the central bank doesn't do its job, or if the Fed, if they release Fed coin, the purpose-bound money that the Monetary Authority of Singapore is trying to do, all these other projects, at the end of the day, if you're not communicating the value proposition to the end user, which may be Joe and Jane Public, they still won't use it because they're going to be comfortable using what they already have. And then there's still this whole other side of things where presumably, hopefully, there's not going to be disintermediation and risk. But if you really look at how much you're going to need to fund the euro area economy, like when the deposit facility rate was negative, we were talking about funding to the tune of 1.5 trillion. Now, to pre-fund the digital euro into the euro area economy, to spend 1.5 trillion with the deposit facility rate being what, like 3-4%? Have fun.
No, but maybe just also to add on this, right? Because so if we are looking again, I'm always taking the retail side to make it a bit, hopefully a bit more relatable, right? And now the question, I'm with you, right? The ECB is currently not planning to basically directly manage the account, but, and this at least I find an interesting thought, the technology would enable the ECB to do so.
It
right?
already does.
So now, of course, if you're asking me, there's also a bit of political discussion driven by lobbying, right? Because of course the ECB cannot say, okay, banks introducing the digital euro, and by the way, retail business ends for you by now because actually we don't need you anymore, right? But that would be essentially a significant efficiency win in the system that could be achieved. Of course, at the expense of the traditional banks, we have to say, right? And therefore, it's not going to happen, at least not at this point in time. But that would be a theoretical advantage if you're asking me. The other advantage, but this is then more for the non-governmental controlled digital currency, say for example Bitcoin, is since, because you already said it, right, people are using the euro, not necessarily trusting it. They don't have another choice. But now, given MiCA becoming more into force, cryptocurrencies being more regulated, we actually achieve, at least to some extent, a competition between different issuers of money, not only the central bank anymore, but also private organizations. And now the key question for me is, whom do I trust more? The ECB, who has written in its constitution 2% inflation goal, indeed, in the aftermath of Corona being significantly beyond. So we see the constitution does not necessarily need to be the reality. On the other hand side, something where I have written into the source code that the maximum number of Bitcoin is 21 million. So therefore having the highest security on non-inflationability that I could have in the world, right? And I think this has shown that there are some strong points, especially in crisis situations, that non-inflationability of cryptocurrencies may drive trust of these currencies beyond the trust level of traditional governmental controlled currencies. So this is an advantage which I also see, that you have kind of a corrective function, since you have a competition level that users can now freely choose which currency to use, that of course if the state isn't doing a good job in money management and I have a high inflation rate, that more users will shift to the more stable alternative currency.
If the state wants to accept competition, that's another background question. But
my consideration was more like on the abstract level. I think where we are considering different kind of project of different digital currencies, outside of the, let's say, public incentives that can be set up to facilitate one project together with others or instead of others, like more private. I think that there are three main elements in every digital currency project which, assessed together, they should find a way to essentially establish, okay, it makes sense because it's solving this purpose, okay? We have a stakeholder ecosystem, which is probably managed by stakeholder which issue that currency. We have a technology function, which is generally a DLT or a centralized ledger system, which interacts with users which hold tokens, which have specific functionality. Okay, so if we see from that perspective, we can see that CBDC, it solves the purpose of managing monetary policy, managing monetary systems at state level. And we can see the interaction with commercial bank money, where you have restricted networks of issuers managing a commercial banking money strategy. We can have at the same time liberal choices of private citizens of issuing utility tokens which serve some purpose of private money between the communities. And they saying they can simply coexist. There's no better or worse. They serve a specific function of a stakeholder community, which issue that token through the technology function for a specific purpose.
Now, this is actually bringing me to one more question I would like to ask you guys. We are naturally getting there. What's ahead? Because we have these movements. Basically, you're describing that there are private initiatives that are now sometimes getting to a level where they start to compete, or sometimes they already did, but now it's like for the normal person getting a little bit more attractive or interesting, which is, funnily enough, sometimes connected to regulation, hopefully not always, because regulation can, if you don't trust central bank money and then the central bank or the politics regulate the competition of it, then it's a difficult choice. But basically, so we're seeing developments here. We're seeing a growth and a kind of like getting into adulthood of the, let's say, competition, but not always competition. Sometimes the parallel things.
It's not a competition, actually, because if we imagine a future user experience, as a user, you will be able to redeem and mint different kind of tokens according to your functional user experience that you want to take, which will be of course restricted to the regulatory and stakeholders that you are interacting with. Of course, if I want to pay my banking services with a meme coin, probably I won't be able to do it. But if I want to exchange the economic value of my voucher with another friends of my community, I would be able to mint some stablecoin that I have in my own account and redeem it to generate some meme coin which have some access on my specific DAO, and then use it to exchange my voucher with my community partner.
Yes, so we are getting, let's say, progress in several fields. The more traditional focus of like central bank, state behind it, very trusted in some cases, not so trusted in other cases, like Argentina probably. So we have that, and we have those movements on many different layers, I would say. What is your perspective, for example? I mean, where are we going with this from what you can say today? Also, simple stuff like, when are the central bank digital currencies coming, for example, because that's probably going to have an impact. So just tell us, when do I have to put into my calendar that the first central bank digital currency is coming up?
Well, I mean, at least for Europe, so the ECB released their cash strategy in 2020 for 2030, so at least cash for the next few years. I once upon a time worked there, and I actually worked on the directorate that dealt with banknotes, and I can tell you that the ECB, at least from my personal experience, doesn't have any intention to get rid of cash. Also because looking at, from a European perspective, a lot of European users still use cash. Yes, relatively, there's a percentage change between cash at the point of sale from 16, 17 to 2019, but cash is still by and large the most dominant means of payment in the European Union, also driven largely by member states such as Germany, where there's also higher levels of household savings. Users are more frugal. People tend to save more. People tend to use as well Bargeld in larger quantities. And I think generally in the future, I'd like to pose more of a really hyper-theoretical question, because this is one that I've become thinking about recently. So let's say we talk a lot now about this convergence of blockchain and AI and all of these things. So imagine in the future you have these autonomous agents, okay? And these autonomous agents are spinning up products for consumption by other autonomous agents. So they're basically, the autonomous agent is both the originator and the consumer of the service. These things will not be paying each other in cash. They'll be paying each other in some form of digital token currency.
I challenge you, who knows? Maybe if it's Siemens, maybe they will use digital euro.
Humor me for the purposes of this example. So let's say they're paying themselves in some form of token-based system, if they're doing this directly, okay? You have an economic system then potentially that is parabolic, at least from a GDP perspective, could be parabolic. And if we buy that, then what does that do for our views on scarcity and time value of money and the opportunity cost being give up over get? What I'm trying to say is, what does that mean for a monetary system that becomes hyper-deflationary?
Yeah.
And so everything you think you know about money, about scarcity, about what the maxims that underpin our economic system just collapse. And so what does money even mean? And Joachim said it very, very well earlier today. Money is an idea. Money is in the mind. Yeah. So there's smarter people than I have said that, monetary scholars, and it truly is. I mean, if the four of us on the stage agree now that water bottles are currency, by God, water bottles are currency. So long as you're willing to accept it for something, it's currency. And so I think that then this entire principle and this discussion that we're having now is theoretical, but in the future could very well be something that we contend with on a more, let's say, down-to-earth level, if I brought it back.
Yeah.
I don't know when retail CBDCs will be out, maybe within the next 2 to 3 years. There's a timeline for 20.
Voting rights in some DAO in order to maybe get some server rental space on somewhere on the world. But if I go to the supermarket and I want to do my grocery shopping, I can pay with Bitcoin at the cashier, right? And once this step is reached, and I am envisaging that, then of course we will have a completely different ballgame.
So before I would have to hand over to you. But one thing I want to, because we're getting to the closing soon. So basically, am I getting your, and you would answer first, please. Am I getting your perception right that we are kind of like, we might have in our minds when we're coming from, I mean, most people who are at least not, let's say, 15 here in this room, some of you may, very early adopters then, but most people are still in a mindset of like, I had this banknote, I had this cash, then Bitcoin came, and then we were moving, but it seems to me that we have to question our perception of what currency is and was and will be, because then I will have totally different like things in between what I used to see as a currency, like the Deutsche Mark, for example. We'll probably have a lot of other things that are somewhere between the voucher that I get for whatever of these loyalty systems or whatever I have, and the traditional currency, which is cash on the desk. It seems to me that we have to open our minds a little bit, and we'll see, and we're already seeing a lot of experiments, but now you are saying, and I would give you a hand over to you for that, you're saying this becomes more structured with Mika, and so you have high hopes that a lot more is developing in between and on different layers. What do you say to that?
Well, to add on your consideration, I would probably say 3 things. Firstly, the time of adoption of the technology into the society is not as equal as the evolution of the technology itself and development. These create gaps, which of course is up to the human to handle in order to create a flexible environment to keep using a traditional system and start experimenting innovation system and keep progressing with the technology. Second, I would say that a general consideration that emerged from this discussion is that we have generally 2 main definitions of currency. One which is more tied to a legal and institutional meaning, which is also going to be much more defined with upcoming regulation and provision, legal provision from different kind of tokens, which can mean as a form of currency. From the institutional one, to the private one, and to the community one. And the third one is that the time, to come back to your previous question, the time of adoption of this technology will not only depend by the function or the project itself, but will be also probably harmonized with the dimension of the stakeholders which is managing the project. So Asia, Europe, and America will have different time. And my bet is that probably Asia will come first, because by definition and by spirit, there is a different approach to the innovation, and most of the institutions are structured in a way which facilitate that progression of the project. Later, US and Europe, I guess. But that's my opinion.
So we are basically getting to the closing remarks. If I may, I'll use those as yours, because that's a very interesting summary. Can I ask you for your ones as well?
I really like the first thing you said regarding the gap, because I mean, if you take stablecoins right now, if future killer use case for stablecoins may be payments. Right now, it's not payments. Right now, it's market makers using them to rebalance their positions. This is what's driving
trading.
on-chain activity in stablecoins right now, because that's where the benefits are accruing. You can make the argument that it's payments, not payments. And it's not going to be payments so long as market makers are doing this, and this is driving stablecoin adoption. Realistically, that's where the alpha is on that. I think, broadly speaking, Mika does a lot to address, again, I read Mika, especially after the interjection of the EMTs and asset reference tokens, as it's a stablecoin regulation. I mean, just the wording within a single currency area on most areas, on most issues regarding reserve requirements or prohibition of interest, all these other things, kind of show you where the economic and political thinking was at a meta level when they drafted those parts. So I think that Europe has done a lot to kind of safeguard consumer protection for this, but this also poses considerable guardrails to adopting stablecoins and e-money in Europe and scaling it, because it's capital punitive and expensive to operate as a stablecoin issuer in Europe. Yes, it's safe for consumers, but as a business, it's expensive, and you have a lot of reporting requirements and compliance costs, and this is the delta on your business model. So I think, generally, I agree with you that it's likely not going to be Europe that drives the retail payment side of things. I think also this is going to go in areas where there's a larger velocity of money, not just volume of money. So the turnover and the spending. If the US got its act together, it could probably blow past everybody, because Americans they're very credit driven. They're very risk prone rather than averse. There's a different pathology towards spending.
I have a different opinion.
We have to wrap it up.
In short, I think that right now it's anyone's bet, but I think Europe, I would say that regulation is Europe's lingua franca. I will leave it at that. We just need to get to a point where the regulation truly does enable innovation, ceteris paribus.
Your last
just
words
very,
on
very
this?
briefly, exactly, because so we haven't really touched upon actually, is it also the bad or even the ugly, right? And just a remark, so I'm not carrying a tinfoil hat, as you can see, and I'm not a conspiracy theorist, right? But if you take it to the extremes, right, and this was, will the ECB exactly know what we are spending, right? And I think, take that to, say, the example of China, right? China was pushing very fast on their own digital currency, on the other hand side, banning the private digital currencies, right? They already have a social score. Now just imagine, I'm just posing the question, I'm not saying that this can happen, but if you would connect the social score with a stately controlled digital currency, don't know if you know the movie Demolition Man, but we are getting close to this one, right? I mean, therefore, just saying, maybe just to briefly touch on the ugly side that could happen, yeah. But I think that there's a bit to add to it.
Okay, last words.
I would say there is a strong need for payment service for a provider to implement stable coins, especially to avoid banking timings and operations.
Yeah.
So Europe could have a strong benefit on implementing like stablecoin rails which integrate digital euro, just as innovation of payment accounts regulation, okay? But this is what exactly China did, which already had like strong merchant and retail banking system, so they pushing the CBDC, not the stablecoin for like governmental probably dimension, to efficient the payment operation like the 24 hours, 360 days a year.
That would be a fully new, interesting discussion, by the way. But to try to simplify and wrap it up here, and we don't want to end up with the ugly, so I would say there's huge potential, and we will all be using something in the future, and we will probably have a lot more opportunity and option. And we have to keep watch in some regards, as you all mentioned. Now, let me thank, number one, of course, you guys for joining here, but also Erwin Voloda, Head of Policy of the European Banking Association, Blockchain Association, and of course, Eugenio Reggianini, and who is the Head of Growth also at that association, and Yasser Hankia, thank you, CEO and founder of SafeDroid. They're still here, so happy to discuss probably, and we are supposed to close now, so thank you very much. I think next time I'm going to ask for some more hours for the discussion.
We could probably take
Thanks,
all the
guys.
day.
Thank you. Mobile phone.
Thank you very much, gentlemen. That was a fantastic discussion, one of the best ones today, but as we know, there's more coming up. We've reached halftime, ladies and gentlemen. The second half is coming up. There will be a few more exciting things to look forward to. Now we have lunch. Please come back and join us at 1:30 for the second half of the program. Thank you very much. We have another great program lined up for the second half of the day. We finished a bit on a negative note, digital currencies, the good, the bad, and the ugly. And if I wanted to put percentages on it, I think there might have been a bit more ugly than good and bad. But we're going to start on a positive note now with the next panel discussion, full of heavy hitters, actually, looking at industrial use cases and what is possible under the market in crypto assets regulation, MiCAR, in the European Union. I'd like to welcome our moderator, Sebastian Becker, Managing Director of the Bundesblock, and he's going to introduce the panel. Sebastian, over to you. Yep.
Hello, everybody. In our little digestive room here. And I just saw that size matters. That makes me introduce my panel, which is a small one, but nevertheless, it's bigger than you think. So please, Miguel Watz, Simon Engel, and Joachim Schwerin, come on stage, sit down, take a seat, relax.
I feel a bit detached. Anyway.
Well, that's the distance to Brussels that we all feel occasionally.
Yeah. Thank you for making me feel comfortable here.
Thank you. Gentlemen, so we clearly have a not very balanced panel here in terms of gender, but sometimes it happens, so sorry for that. But we have a very good mix, I think, of, me, I'm the association guy today. If I'm not wearing the association hat, I'm a consultant. Then we have another consultant. No, I'm the consultant. We have Joachim from the European Commission, active at DG Grow as head of policy, basically. We have Simon from SAP, a small German startup that is quite promising. And we have Miguel Watz from Hauck Aufhäuser, one of the private banks we have, the hidden gems in Germany. And we want to talk about the industrial use of blockchain. We all know that in the meantime we can tick the box. The financial markets have learned and understood that blockchain-based tech rails can be an efficiency driver or are an efficiency driver. It's a regulated playing field, basically, right now. That's what we are going to talk about as well, with MiCAR coming in. But we all know the comments we often hear, there is not really a mass market use case, industrial adoption is lagging behind. And yes, that might be the case, but there are some good reasons. And with MiCAR coming in, one of the big reasons, regulatory uncertainty, is about to not fully disappear, but at least go away and become a bit lighter on our business development shoulders. So welcome to this panel. We hope it's going to be interesting and inspiring for you as well, the next 40 minutes. And let's start with a quick round of introduction. Joachim, what are you doing in Brussels?
Good question. I'm principal economist in the unit responsible for the digital transformation of industry in what we call DG Grow. DG Grow is basically the part of the European Commission that deals with the real economy. So companies of all sizes, entrepreneurship, but also internal market. And I've been for a very long time in the blockchain and crypto space, basically to develop policy for everything that relates to blockchain, crypto, tokenization that has real economy aspects. And I do think that finance is a humble servant of the real economy. I'm also involved in MiCAR, the digital euro, and any other project that we have.
Humble servant is a good summary, I would say. Simon, SAP is at the crossroads between, let's say, the backends of the world and the real economy. Please let us know what you are doing in Waldorf and beyond.
You could say so, yeah. And thanks for calling us still a startup. I think from a mentally and cultural perspective, that's
you're the
still
last
true.
Globally successful startup Germany
That's
had,
still
yeah.
true.
Even though
That's
you're
still
50 years
true.
old, 51 or
Apart
so,
from
I
Bayern
think,
München,
yeah.
but that's another question.
Yeah.
Yeah.
And Hoffenheim. But I think like with, I think 100,000 employees at the moment, SAP is actually, I think, the biggest tech company in Europe. My role there, I've been with SAP now for 8 years, in blockchain since 5 years. Done a bunch of things, started in educational training, then did some strategic customer and partner engagements for our board member. And since 2 years, I'm part of our cross-product management organization, which really tries to bundle and bring together all the different solutions we have in all the portfolios to really bring end-to-end business processes to our customers. Could be in any industry, could be in finance, insurance, automotive, whatever you call it. I think that's also a little bit the size of SAP. And my role is there really to support the payment product and the payment portfolio we have, including also blockchain-based use cases or products, and it has been a pleasure since the past 2 years.
Mikael, you've been everywhere in Germany, basically, in Frankfurt, in Stuttgart, all those big financial centers. What are you doing and trying to establish with Hoc Aufhäuser Digital Custody?
Sure. So we're a small piece of a larger puzzle. As a humble servant of the real industry, and we're basically a traditional and very old private bank, over 200 years of history. But we're still very innovative, and what we've built in the last 6 years, so to say, are 2 main pillars. So one pillar on the fund side, so we have fully regulated crypto funds that fully invest in crypto. We do that through a one-stop shop approach, so we do everything that is required from the German law, from portfolio management until including custody, and then also all of the necessary depository controls that you have. But I think the thing that we're most renowned for is really our work in the crypto securities space. Last year, we had the privilege of working with Siemens together on a bond that was issued on the Polygon blockchain. As a custodian, as a small piece in this humble puzzle, our job is to make sure that anything that has to do with the blockchain and with the wallets is accompanied. So we're a traditional house with the regulated custodian in-house with a BaFin license, looking forward to MiCA, and we offer our custody services also outside of this puzzle in the bank.
Okay, let's continue with this ambition to establish end-to-end value chains. You just described it a little bit for the tokenization of a big bond in that case with Siemens, and we all know that according to different financial regulation, there is a whole end-to-end value chain, including custodians and other RegTech providers typically as well. But if we think about the longest value chain, the industrial value chains, we all know that there are initiatives here and there. There are also infrastructure initiatives at the level of the Commission, or that have been launched by the Commission several years ago. And even industry insiders have lost a bit the overview. Where are we today? Which consortium, which initiative is still alive? You know, where do we sit in terms of being ranked high or low on the innovation agenda? We had the European elections, Joachim, in June, and there's still a lot of shuffling, I think, in Brussels with job roles and new positions. Yep. Can you tell us a little bit about maybe the 2 or 3 most important initiatives? Where are we, and what can the industry and we as people that work in this community, what can and should we expect?
There's a number of sorry for that. There's a number of positive aspects, but usually you don't see them. And what people like to do when they see that a new 5-year cycle in Brussels is coming on is they read the big speeches, they look at things like the Draghi and the Letter report, they read the mission letters of the new commissioners, and they don't find anything on blockchain and crypto. And that does neither mean that it is not there, nor that we don't find it important. It means in a way that it has become so normal from our perspective that it is part of a number of initiatives that we are bringing forward, but we don't mention them expressly. And that I would see as an advantage, because the more something is in the public limelight, especially with certain politicians, the more problematic it gets in Brussels, because then the personal views come in. And that we had with one person that was commissioned until recently, who just didn't like blockchain for whatever reason. So it's sometimes better to be under the radar. We have a number of initiatives, especially in the real economy, where we are massively using blockchain, and we'll do that even more in the future. I recall that about 10 years ago, nearly 10 years ago, when we defined the innovation priorities as in Europe, and I proposed blockchain, we proposed it for the real economy. Blockchain is nice for the financial domain. Blockchain is nice to have for many purposes, but as a public service, we must really look into concrete benefits for companies of all sizes, for citizens, for our societies, and that is what the functionality of blockchain as such can deliver. And since then, one of the initiatives that is now very mature, we worked on it over the last 5 years, is an open source blockchain infrastructure to detect fake products. 7% of our imports in the European Union are counterfeit products. And we have developed a system which works with NFT-based digital twins, where basically from the source of the production of an item, we can ensure that this is an original product, and we can monitor the transport through the distribution chain until the end of the consumer and can guarantee that this is an original product. Basically, all of our work is public. It is open source, so you will find the code also on the website of our colleagues and everything. We are currently in the pilot project. We've tested that last year with the Netherlands. It works perfectly well. And we are now mainstreaming that so that industry players can get on board with their solutions. We are completely agnostic as regards to type of technical solution, which type of blockchain, whether that is permission, permissionless, etc. We don't care, as long as we can make it workable. This will lead to a new procedure which will be very much in the focus in the next commission, which we call the Digital Product Passport. Now imagine that we have all types of regulation. For example, we want to fight forced labor, we want to fight child labor, we want to ensure that chemicals regulation is met, we want to make sure that environmental aspects are respected. For that, basically, you need information. The information is in a data sheet, in a document. That document is tokenized, and the big question is what happens then, because it would obviously be a nightmare for a liberal society if there was a centralized silo where any type of authority could get access to personal data on who worked on what product, etc. So we had to respect the GDPR, we have to respect the privacy. And this will be a big discussion ahead, but with the anti-counterfeiting, we have a practical example in place. We have applications of blockchain in many other sectors, and we know very well also, Siemens was mentioned, what industry needs. I think the biggest advantages of blockchain beyond the assurance of the integrity of a product or a service have not yet been exploited. And that is things when we talk about payment systems, that is like micropayments, that is programmable payments, integrated systems where basically you can have autonomous actions within value chains, you have digital factories, metaverses, etc. All these opportunities are out there and need to develop. What I observe over the last couple of years, though, is there are a number of bottlenecks. We know Siemens, we know Bosch, we know a lot of other companies, Evonik, many, sorry?
Hilti.
Hilti, of course. We had discussions years ago with Hilti on that, who are building these systems. But I must say, at least from my perspective, and I speak a lot with enterprises, I see limited progress in the last couple of years. And that has to do with a number of horizontal factors. That's interoperability and standards. That is skills, programming skills, and the quality of the workforce that you have. But it is also the lack of a really comprehensive payment system that allows for the various solutions to come together. Everyone, in my opinion, is developing individual solutions, and MiCA really doesn't help coming to the title of that, because MiCA, as we discussed this morning, is extremely narrow. If you look, and I'll stop there, at the whole spectrum of possibilities for payments, when you come to stable coins, which is under MiCA, which for me is a rather transitory phenomenon. Then you come to CBDCs, retail, wholesale. Wholesale, very interesting, lots of practical problems. Tokenized assets, tokenized deposits, all the opportunities there. There's a lot of hype in the market. There's a lot of fascination, people building around that. We are ourselves orchestrating certain things. We have an initiative called Tokenize Europe 2025, where we bring industrial companies and banks together to discuss the opportunities. But all of that is in the infancy. And the main problem is, I would say, a lack of guidance from the highest political level, for example, when it comes to CBDCs, but also tokenization of goods, to move in that direction. The digital euro discussion is a typical discussion in this regard, where it is focused on retail, whereas it should be on wholesale and the practical problems on that. The same discussion on real-world assets and tokenization thereof. We have in MiCA the arts as stable coins, but in order to ensure liquidity For example, reserves in gold or other commodities are out of the question because that's not liquid enough for the legacy system, which is a disaster. And therefore, in that regard, tons of good ideas, tons of capital out there waiting to be invested, but a myriad of practical problems, but especially a lack of steer to coordinate all of that, which is a massive problem.
That was a very good summary, and basically also
So we can go to coffee.
A call to action. Yeah, you can go to coffee. Your job is done. Thank you for that. Simon, if we think about SAP, and let's maybe switch from the public sector initiatives, and Joachim mentioned some of them, so we will still have to wait for announcement on the digital euro. We have the EU digital identity wallet taking shape and form, where also blockchain is not mentioned necessarily, but it's not excluded. So there will be a competition for the best solution, I guess. You mentioned initiatives that are built on what was formerly called EPSI, now Europeum, like the EU IPO track and trace solution that you just pointed out. Let's switch to the private sector. One of the initiatives that Joachim didn't name, but somehow included in his comment, is the commercial bank money token. Simon, that's also one of the initiatives that you are looking at SAP, but you look at payments, you look at identities. How important is it for you to better understand what is coming out of the, let's say, public sector, or where do you see the biggest opportunities and also the biggest obligations for the private sector to take action?
Yeah, I think for SAP, I think one big piece which also made us successful is actually providing localization to the business process in the different countries, adapting to the regulatory changes like that come also top down or from wherever. And for us, it's really mandatory, first of all, like to get this into the software, but also make it practicable for the end user, but also for the corporate process. Because if there is a regulation coming down, for example, MiCA in Treasury, whatever, but you cannot manage it in the business process, it's difficult to sell to the enterprise in a way. I think in terms of, and this is maybe a very good conclusion, and at least where we stand in terms of blockchain, just because it's not written in the strategy paper on the websites, just because that it's not gone. I think there is the big AI hype, which also still pulls in a lot of investments. But we really monitor very regularly, hey, what's going on in the sector? To what regulation do we actually need to adapt? Certain regulation does simply not affect us or our software, so it's just not necessary. But really for the CDBC topic, the stablecoins topic, it's very, very relevant. Because we manage treasuries of the Fortune 500s, mid-sized companies, and now they start, even with MiCA, hey, we do want to use stablecoins. Like, does your software actually provide us the context to use it in the business process? Stay compliant, stay in regulation. And this is what it makes it very interesting, monitoring it. But on the other side, and this is maybe also the second topic, it's like there's a skill shortage. Not a lot of people do really understand what does MiCA mean. Also do understand that it's quite narrow. It does not apply to tokenized maybe receivables, which goes into trade financing, which would be super interesting for us from a business process point. So I think it's important to keep the exchange, to keep the discussion. But on the other side, you also need to acknowledge we are kind of in a domino effect. I think one use case needs to be figured out, done, adopted, and the next can and will follow. But it's not that we currently are at a hurricane or at the exponential rate hitting off. It's really, we are still doing the groundwork, fundamentals, in onboarding the people in enterprise and understanding, hey, now we have regulation. What are you going to do with this new framework in your business process?
Okay, thanks a lot. Let me start the next question to you, Miguel, with an anecdote. I think it might have been 3 years ago when I was talking to a treasurer of a large German tier 1 company based in Munich, and he said, I'm so desperately waiting for my business units to come up with project requests. We need to build stuff. We know that. But of course, it's the chicken and egg problem. There is no request coming from the business unit. And he said, oh, I'm so glad that El Salvador declared Bitcoin legal tender, because we are serving those 200 plus countries worldwide. So now I can build something. And of course, I'm not going to use their wallet because it's flawed. So we are going to rebuild a nice process. And that's what people often forget. You know, we focus on the digital euro discussion, but a global corporate has to act globally. They have to be compliant or be able to work with systems in China, in El Salvador, and elsewhere. So the world doesn't wait for, let's say, specific German or European developments or what Liechtenstein does. So it's a global business, and that's a good thing. Simon mentioned treasuries, and I think if we say we can tick the box in the financial sector, then I think the next best relative is the corporate treasury. Are they becoming the dissemination hotspot for the knowledge that we've acquired in the financial industry over the past years? How do you see it working with them?
Yeah, and our work with treasuries is really, first and foremost, they're playing catch up. So product development or marketing or some other areas of business have a need. And then treasury is usually a strongly operational unit, and they have to deal with the flows of money, both from the point of view of financing stuff, but also from the point of view of just doing the normal operations. So transferring value, storing value, accounting for value. And this is where it's interesting to work with treasury, because then we can have a look and see what's happening at the product side, at the corporate or the industrial side. And the discussion of stablecoins is obviously a discussion that comes up. Right? From the point of view of financial services, what we do is really give a way of how people can store, invest, and transfer value. So that's it. When we talk about stablecoins, we're not talking about a new financial instrument, mostly. Maybe MakerDAO, that's a different kind of thing. But we're not talking about a new financial instrument. We're talking about a different form. And so when we have to tackle the requirements that both the customer and then also the regulator have, what we do is a transformation of the form. Because when I go to risk, they tell me that it's the same product. Whenever I look into what the instrument itself is, it's the same product. Right? It's just transferred differently. And this is both non-interesting as well as extremely interesting, because we know that in order to exchange value efficiently, you don't have to look necessarily at the instrument, but at the way that the instrument is transferred. Right? So it's getting very complicated. What I'm trying to say is it is interesting to look at the non-functional side, and also to look into when is the customer actually wanting to transfer that instrument. So, and that's what I am seeing really is the convergence really of the flows, where we can start saying things like, well, I am pretty sure that this item is here, and I'm pretty sure that it's now there, right? And then start looking into the interface with the financial system and saying, well, okay, now if this is really something that's happening, then we can tie these workflows together with transfer value, right? So this is what we're seeing on the trade finance side. And this is definitely enabled by regulation. What's interesting is that, so that's point number one. Point number two is some of these workflows are being represented in public blockchains, and public blockchains have an interesting tie to it, because they run based on one financial, on an asset, right? Bitcoin network doesn't work without Bitcoin, the asset. Polygon network doesn't work without Polygon, with a Matic, something called something else. Yeah. And there is an investment angle to it, right? So some people interact with these blockchains from the point of view of investing, which means that even if you interact with these blockchains from the point of view, I just want to transfer information, you're still in the financial services loop, right? And this is what we're trying to also give treasuries the comfort, is to give them the rails through which they can rule out and deal with the transfer of information and the transfer of value in a regulated way, and this is where the scope of MiCA comes in.
Maybe one question to you, Joachim, based on what Miguel just said. And yes, I absolutely agree. You know, deconstructing these processes, understanding them, and understanding where the switching or the rerouting is changing is important. But from a, let's say, European BizDev perspective, should we talk about transactions, or is it about end-to-end automation and efficiency? What's the EU's perspective here?
I don't think that the EU has a clear perspective on that, and I think for good reasons. What I am more busy with, and I know what you are doing in your companies, and I much appreciate your work. We also had this discussion with the INATBA group on industrial use cases, which is a very good summary. I think we need to understand first what is really the practical way that enterprises are doing business. Then we have to align that with principles that we have, and then we have to identify issues on which we focus with very limited resources. And this is something that we see very much in all these aspects. Both gentlemen mentioned trade finance. Actually, trade finance, and we don't have a political mandate for that, it's the same with MiCA, but we have identified, together with certain people in some member states, that trade finance should be a priority for us now in order to see how we can help the tokenization of value chains that, where we all know when it comes to enterprise financing, they to a large extent relate on trade financing. That's a very practical use case which merits attention, and that is not yet defined in a sort of strict paradigm. And what is then the practice of the companies needs to be, on the one hand side, be aligned with very simple skill levels of the workforce everywhere, and then with our principles. And I start with the workforce. When we were building that anti-counterfeiting infrastructure, I was in the jury to select the final project. And I can tell you that from a perspective of elegance, of ambition, there have been other solutions. But we had the luxury of having 10 jury members, 5 of which were abstract theoretical people like myself, and 5 were practitioners from the companies and from the transport organizers. That in very simple terms explained to me what our workforce likes to do is scan stuff. So whatever you do, make sure they have a scanner in their hand, there's a QR code, and that they can scan. And this is in a way a bottleneck, but this is a reality, because if you look into transportation, it's basically putting boxes from the left to the right and scanning the stuff and putting that on some systems. So now we have a study going on actually on the security or not of QR codes, because that's an interesting question also related to these things, just to give you an example. So very simple things that have to be considered. On the other hand side, we have the concept. Now we discussed that with many people. It's a topic here as elsewhere, this unfortunate discussion on what is a transaction. For me, and I'm an economist, and I refuse to see that in any other technical way, a transaction is, if I take my own definition of Web3 very seriously, it is a transfer from A to B, which is basically, in principle, irreversible, because B can keep what he has, and it's a safe transfer and termination of a transaction. That is one transaction. I do not care what is on a smart contract, or who has to do what at the end of the day, or what goes here and there, because in economic terms, a transaction is a transaction, not 15,000 microtransactions. And that is something I think that people have to understand, that when you are in your technical silo, yes, you have arguments for alternative views, but if we want to come to a common language, this is about semantics, this is about coming to a integral paradigm from the real economy and finance of what the future digital economy is, will be, we have to keep concepts very, very simple. And we have to say that whatever you do in your domain, this falls under this definition or not. And it can work. We have securities laws where basically we don't have a European definition of a security. So apparently we don't need to have this complete fine-tuning. And that's something where I see it's good to hear that indeed MiCA creates these additional elements. We think that every step that comes in compliance with our philosophy of bottom-up needs to be one small meaningful step forward. So for example, when we talk about tokenized bonds, than just to go to the next level of finding the demand for that, scaling to the next level, looking for a technical solution where you can combine with another operator is a meaningful step forward. The same is with industrial companies. I mean, I know very well what they are doing, but it has to be aligned with data security. It has to be aligned with questions in the metaverse of what devices am I using and where's my data stored and things like 1,000 practical problems. But the only way forward is really a small step-by-step process, but just doing something. And I don't care what that something is, as long as there's a demand for that. And that is probably the key message that I would like to convey, which is really, when you ask rightly so, for the big concept. We have the big concept, which is somewhere out there, Web3, the token economy. But the real practical step forward is just one little minor step that basically brings someone. But the bottom line of all of this is there needs to be an alignment between supply and demand. And that is what I note with many financial suppliers, with many banks, with many of the institutional funds. They have no idea of who their customers are. And my recommendation would basically be, and I think that especially Haug Aufhäuser is an excellent example for that, if you do not understand in very practical terms of actually what your clients needs to build, then you waste your time in offering financial services.
Yes, I do agree, but not fully. I think one problem that we have, especially in Europe right now, because we have this inward-looking discussion, are we efficient enough? Is there still room for us in the global competitive arena? And we focus, or tend to focus, on regulation. I'm not against regulation at all. I think a defined playing field is a defined playing field, and it helps. And we can still work on playing field 2.0 afterwards. But sometimes we forget to talk about the positive vision. Take AI, for example. Our AI champions in Europe are now hit hard by court cases, because in the end, what happened, they just started with Wild West AI. And once the genie is out of the bottle, then you realize, oh, we should have worried about trusted AI from the beginning, meaning underpinning it with blockchain rails or registry services before we start feeding crap into our systems. And then investors get nervous, and then, you know, the bubble collapses. So the problem with this fascinating backend technology that we are working on is it's not super sexy to explain, but of course it has fundamental capabilities that would serve us well going forward. So that's...
I don't see the contradiction, but...
No, there is no contradiction, but I guess that's why we're here on the panel, because we need to educate. We need to educate politicians, we need to educate our managers, and we need to push forward. And I fully agree with your observation that even though blockchain is not standing in the headlines, that's a good thing, because we shouldn't worry about blockchain for the sake of blockchains, but about the innovation agenda that will serve us well. And coming from Germany, and partially that's also true for Liechtenstein, the financial markets are not at the core of our DNA compared to the UK and some other markets like Switzerland, but we are an industrial company. So if we don't automate efficiently, if we don't manage to build our values into these automated processes, then we will have a problem. Because we can't outnumber the Chinese, and we will not outperform Silicon Valley in terms of allocation of private equity, I guess. So we can win some football World Cups and maybe this efficiency and automation game, hopefully. Some other things we have not talked about a lot for the last minutes, and Joachim, thank you for mentioning the INAPA Industrial Blockchain Task Force report that was published in July. You will find it on the INAPA website. Joachim was so kind to be an interview partner. Simon was a co-author. I led this task force. And also at the Bundesblock level, the German Blockchain Association, we are trying to take those discussions forward. We mentioned the digital product passports, but maybe, Miguel, a question to you, because typically you do not necessarily link a digital product passport to a bank or to a bank's digital department, but do you have a view on it? What's your angle here?
My angle is, thanks, my angle is really at the interface between the product pass, right? What's the product? Probably nothing to do with financial services. but at some point it has to do with financial services. So the question is, where does it have to do with financial services? Maybe when a transfer or a transaction is done, right? At the point of view of the product itself, it might be something interesting because it identifies the product and that's also its origin. What I'm especially interested and excited about is really something that we don't usually talk about, which is the marketing side. What do I mean by that? Well, companies have to have a digital product passport. Now, some of these companies will realize that, well, this is actually a pretty cool way to be in contact with my customer. Yes. So the customer now has the good, I have produced the good, I have a tag, a QR code, a label, anything there, and that QR tag will be able to give me, when it's scanned, to give information to the customer. Well, what can I do with that? Well, there are some brands, and if you go to NFT Paris or some other events, you see this, and you see how big the marketing budgets are, especially for luxury brands, in order to explore this communication, right? So I can, I have a proof that where my product was built, but now I can start building communities out of the fact that people that can prove that this product is, I don't know, special handbag, special shoe, special suit or something. I can start organizing events, I can start communicating with them, I can start doing offerings. And this is something now that under MiCA is really something that is regulated, right? And now we have the interface with the financial services. So corporate treasuries, again, they will be playing catch up with their marketing departments. They will be needing solutions, and I'm looking forward to that. What is also interesting is that some of these objects, these digital twins, will also start becoming investable assets. Yes. Right? So if I have a collection, this is already something that we can see in the analog world. And then when it's an investable asset, then it's a financial asset, and then it's something where you need a bank or a financial service provider to deal with.
So I'm a very disappointed Varta shareholder. So I think the digital product passport in the battery sector, the EU lead industry for this, will come too late to get my money back, but just a side joke. We are coming to the end of the panel. That was a very interesting outlook, and I think, we want to inspire, of course, as well. So think of your marketing departments, how they can be relating to business development activities and also to financial services. But let's look a bit into the future. When we come back to Liechtenstein next year, what do you personally think will have been the biggest surprise of 2024, 2025? Joachim.
I thought you wanted to ask Simon first, but that would have given me the luxury of thinking a little bit more. I think, and I very much like what you said, with these new opportunities that are created, even if, like I said this morning, you have just a grain of sand that you put somewhere and then grows an environment of regulation that acts as an attractor. At the same time, I think that we need to think about building more on that, of finding consistent approach towards tokenizing more than what will be possible under MiCA. At the end of the day, this is massively where the potential is, and there a clarification of terms will undoubtedly have to happen if we see all questions that we are now facing right now, of what will actually be those assets, who has custody on them, what is the certification of assets, so indeed that we not only have a vague idea of where they are, but we have a certification of where these things are. And we should also keep in mind that we see massive upcoming competition on that, because, and that's a side issue in this discussion here, the US global show is coming to an end, including the system as such. We get a multipolar world if we want it or not, and I want it. And that means also that a number of other countries will come forward with very innovative solutions for precisely these questions, because they don't have that legacy system, they don't have the security, but they have the commodities. And this is something where indeed a global approach will come, but in terms of more competition, where I think that both industry and those financial enterprises that understand the needs for industry and have a track record in that will have a massively more important role to play. And next year, I think we have many more discussions on this because we see these use cases emerging. We see a maturity in the market where people are becoming 5 years older within 1 year because now the things are on the table and we can work with that. And that is something where I have big hopes. So I hope that Hoffenheim will still play in the Bundesliga, and as a people, seems to be a topic for you. So looking forward to what you see in 1 year, but I think that's something. Let's not forget the real economy, and let's please focus on matching the demand of the real economy with the supply of the financial sector. I think that is where the bottleneck is.
So much for a short future outlook. Thank you, Joachim.
Maybe they will even use NFTs for marketing purposes, and
you
we
see,
can allocate some budgets to
in other
that.
clubs. So that we'll see in 1 year massively more, that actually sports clubs, but also cultural enterprises will massively more use NFTs.
Yeah, I mean, maybe on my short outlook and note, I think with Mika, the one thing which actually happened, there was a demand for some crypto stablecoin things before, but it wasn't specified for corporate to actually deal with it. So actually, deregulation created demand, which then like institutions like yours or corporates like we can offer solutions to actually tackle this demand. And I think stablecoin is one very good use case. There are still things to figure it out, and I think it's not massively adopted as we would wish it. Maybe a digital euro helps, who knows. But I'm not expecting a big ChatGPT moment in the next 12 months, to be very honest. It's for me gradually tackling use cases like stablecoins, figuring out the next problem, which for me in stablecoins looks like, hey, we need a liquid token that is very good capitalized compared to the US stablecoins. There's an identity angle to it. There is a marketing angle to it because I think most token holders are of the younger generations. They like gaming, they like sports, they have massive budgets, and if you can allocate certain things to this new technology, it's a win. Different other things, supply chain, battery passport, but it's gradually. And I think the complexity in crypto Web3 lies within the complexity and different layers you need to tackle. Regulation, technology, demand, supply. It's different for other consumer technologies, and this is why it takes longer.
Mika, one sentence to add?
One
Guys
sentence.
are getting nervous in the back.
I don't expect a lot of breakthroughs at the level of regulated business because we're busy with regulation. Next year it's Dora and Mika. I think we will have grown, maybe doubled or tripled, but not the exponential curve. From the technology side, I think we will have a lot more mature solutions from DeFi, from Web3 that we can use within the regulated services.
Okay, that's it. Thank you for listening. Let's hope that Miguel and myself will not double until next year. We have to work on that. Joachim and Simon, you can still eat a few bars of chocolate when your favorite clubs do win.
I'll starve.
Let's keep up the good work. See you next year, and also hope that the cross-border interconnection between Germany, because we are all from Germany today, and Liechtenstein is growing, and that the future is more efficient, sustainable, and good for our industry. Thank you, gentlemen.
Thank you.
Thank you.
Thank you very much. Very, very interesting panel, and as predicted, full of deep insights from experienced practitioners. We're going to continue in the same vein in just a moment with a presentation on a topic which is very much adjacent. However, while the stage is getting set up, I take the opportunity to let you know that one of the panelists just now was my guest yesterday on the Rule Match Spot On podcast, Dr. Joachim Schweden, who's been involved in Mika for several years as it has evolved. And I had the opportunity to ask him some questions about that, about the implications and so on. So if you like podcasts, I invite you to check out the Rule Match Spot On podcast on YouTube, Spotify, and so on. That conversation will be published maybe in 2 or 3 weeks. And I would have to say it was pretty good. Our next speaker is going to be talking about standards, and listening to the conversation just now, I think it's pretty clear that standards are important when it comes to industrial use cases. So we're going to welcome Ricardo Simones, who is Executive Director of the International Association for Trusted Blockchain Applications, and he is going to be speaking about Blockstand EU, which is focused on standards and the development of standards in the European Union. Ricardo, join us right here in just a second. I think there's a small technical thing which he needs, which is called a microphone. Also very useful, actually, from my experience. Ricardo, I think you are ready. The audience is very much looking forward to hearing from you. There's no pressure at all. It's all over to you. Take it away.
Thank you so much. Thank you for staying. My name is Ricardo Simões. I'm the Executive Director of INATBA. INATBA is a global association of 140 industry members, 60 GAB, thank you so much, GAB governments and supranational organizations that was launched by the European Commission back in 2019 with the mission of bridging industry and public sector and helping to shape the policy, standards, education, but also in more recent years trying to look at industry developments for blockchain and DLT, and also helping, of course, their members to grow. Specifically today, I wanted to talk to you about a European-funded project under the Digital Europe program, which INATBA is part of, and actually pushed for in a event that we co-host with the European Commission that is called Joining Forces for Standardization. That is usually an annual event online in December. And in its 2021 iteration, we pushed the European Commission, or suggested to the European Commission to actually come up with this funding program that would have three main objectives, right? The first, helping on the blockchain and DLT chapters for the rolling plan for ICT, which is the document of the European Commission that is actually right now being discussed for 2025, that actually looks at the needs in terms of standardization for all ICT developments. So the first was to contribute to that. The second was to reinforce the link with the European blockchain service infrastructure that perhaps some of you know, and that is the acronym EPSI, now moving on to full production with European. And third, the objective was to fund standards experts, European standards experts, to accelerate the work around blockchain and DLT, trying to cope with the market. Of course, the speed of the market is definitely not comparable with the speed of technical standards developments, but trying to speed that, and also trying to, of course, influence with European values the standard process making. So there's 4 partners: Digital SME, INATBA, Small Business Standards, and Uninfo. Uninfo with the particularity that is also there's the Secretariat for CEN and CENELEC JTC 19, which is CEN and CENELEC, for those that are not that familiar with standards, is the European the European standardization body. So the key outcomes of this project are standing on the Blockstand facility, the Blockstand website that you can definitely check. I will focus this presentation later on more of the European standardization roadmap as one of the features that is presented here, but just wanted to highlight the other ones. So the reports for the blockchain inclusion to the rolling plan, the repository of blockchain standardization activities, which is a go-to platform for you to see 120 developments and standardization activities that are going on at a technical level on European bodies and international standardization bodies, national as well, and standardization development bodies that are not the URI's standardization bodies. So their standards are more of guidelines, are business driven, that come from a different process, but like organizations like IEEE and W3C and others. But I would advise for you to check that out. The standardization gaps and recommendation atlas that we just published this summer with some of the recommendations that we got from a survey that we did to small and medium enterprises, companies that we did with more than 200 companies that are in early adopters in the early adopters program of the EPSI, the European Blockchain Service Infrastructure, collecting those informations, what we need, what do they need, how they actually see the standardization process for SMEs and all of that. So it's also available on the website. There's the blockchain standardization roadmap, as I mentioned. I will be focused more afterwards, coming down to more in-depth analysis of some of the recommendations that came out of it. The expert success story, the blockchain leadership outlook, where you have the experts that currently being funded, so more than 20 experts from different nationalities and different topics that are currently, we don't have that. This is a fact. We don't have in Europe that much standardization experts that are knowledgeable about DLT and blockchain. The program is trying also to enhance the capacity of Europe in terms of this technology in the international standardization scene. So we are highlighting their successes and that. And we have an ongoing expert selection process. I don't know if any of you in the room are working around standardization or have some experience with technical standardization. But if you are, I would definitely suggest to apply for a up to €12,000 grant for three contributions. So in terms of the stakeholders map, I mentioned already, so we have on the side the policymakers, in this case the European Commission. We have blockchain initiatives like the EPSI, the European Blockchain Observatory and Forum, and ourselves in NATBA as being launched by the European Commission to bridge, of course, through our standardization committee to be engaged on this. The standardization bodies, the standardization development bodies themselves, the European International STOs, ISO TC307, JTC 19, ITUT, and others, national standardization bodies that are, of course, waiting, hoping for help regarding this process and for something that would come in a more harmonized way and streamlined way, and other standardization bodies, as I mentioned. From industry, SMEs, I would say companies in general, and I will definitely come down to why eventually this would be important for SMEs and companies working in this space. Associations and coalitions, of course, foundations, the industry in general, and research and innovation community and other funded projects like Chase, the blueprint for European skills around blockchain and DLT, and other initiatives. I mentioned in terms of topics here is kind of a breakdown that the topics that the standardization experts are currently covering. It goes from interoperability to e-certificates, privacy, data management, crypto, information exchange, security, concerns to sustainability and circular economy, e-signatures, smart contracts, identity, and digital payments, DAOs, and others. So you see that is very, very vast. However, I would say that the main focus right now would be in terms of digital identity. With the, I don't know if you're familiar with the eIDAS-2 framework, the European Digital Identity Framework, where INATBA was quite successful, by the way, in maintaining the electronic ledgers provision on the eIDAS-2 to allow for a infrastructure to be classified as a qualified trust service provider, for DLTs to eventually be qualified as qualified trust service provider under the eIDAS framework. Now we are moving, because the policy work, we managed to do that through an open letter that was signed by more than 200 CEOs and CIOs across Europe. Council agreed the provision stayed for electronic ledgers. If not, we would have to wait at least 8 years for this to be possible, for electronic ledgers to be in the scope of the regulation. So we did. Now the work is on standards. CNCLX JTC 19 has actually started a work item around how to qualify DLT as a qualified trust service provider. The implementing acts of eIDAS-2 will be delayed, that's for sure, but are being discussed as we speak, and eventually coming up on Q1 2025. So if you work on that, if you work on circularity, sustainability, it's always a focus, especially here, a priority for the EU. And data and smart contracts, that would be the key figures, the key topics at this point. I mentioned more than 20 total experts, 16 male, 4 female. I'm even surprised that we have 4 female, but we do, and we would definitely encourage more. And as I mentioned, and I don't necessarily know, I hope to have a clock here, but I don't, so don't know in terms of time how I'm doing. But so I mentioned the European standardization roadmap. On Blockstand, the more than 20 experts convey in a group that is the technical coordination board of Blockstand, where they discuss. It's kind of a think tank inside of the project, where they discussed what should be a roadmap for standardization in Europe in order to leverage adoption of DLT and blockchain, because again, please pin that, that this is the ultimate, of course, this is the ultimate goal also in terms of for the technology. And a first report was published back in June, and the second one is foreseen for in April 2025. That outlines the key priorities and recommendations for blockchain standardization in Europe. I would summarize 3 key points. Joachim Schwering has already mentioned one, and it's important: interoperability and compatibility, ensuring that blockchain-based solutions are interoperable and can communicate seamlessly through different chains. Security and governance, and scalability and performance. I think if these three items are reflected, thank you, that's the clock, are reflected there, that that the work has been very well achieved. So what are, I would say, the key 5 recommendations at this point coming from the experts? Develop interoperability standards with the clear objective of creating agnostic frameworks and protocols to ensure compatibility between different blockchain platforms. Permissioned and permissionless, not forgetting about permissionless. We at INATBA, this is a very important point for us, that permissionless blockchains could have a role to play in this public sector venture. The rationale behind it is essential for seamless cross-border data sharing and services across the digital single markets. The alignment with the European blockchain service infrastructure and the European Digital Identity Framework. Secondly, enhance sustainability efforts. So establish comprehensive standards for and methodologies to assess sustainability blockchain practices across protocols and even across tokens. Rationale, of course, of promote energy efficient technologies and support EU Green Deal objectives. Eventually, with the Draghi report, perhaps eventually there will be changes on the goals here on the Green Deal, but I'm sure it's still high in the priorities. And in terms of alignments, contributes to the environmental goals, such as the Sustainable Finance Disclosure Regulation and the circular economy initiatives, like, for instance, what was mentioned by Joachim Schwering on the DPP, the Digital Product Passport, but also on the Sustainable Finance Disclosure Regulation, requirements even for MiCA as well, but also for other regulations that are there, like the Corporate Responsive Directive, which will require more than 50,000 companies in Europe and companies wanting to work in Europe to actually quantify and present quantitative data in terms of their ESG practices. Definitely blockchain and DLT can play a role in terms of leveraging the characteristics of transparency, trust. The third being strength identity management. I will speed up definitely. So develop robust digital identity and standards connecting real IDs, verifiable credentials, and abstract accounts, so that this can work in a regulated space, also being important. And by the way, the proposal for a digital euro, a retail one, that came out last year in July, actually mentioned EPSI, European Blockchain Service Infrastructure, to function as the possible vehicle for identification in the case in the framework of the digital euro retail solution. So the rationale here is critical for trust and security in digital transactions, aligning with the EIDAS regulations, supports the European Digital Identity Framework. The fourth, support custodial standards, create standards for institutional custodial services to ensure security and compliance, aligns with regulation like MiCA and DORA, ensuring safe custody of digital assets, provides regulatory clarity in the digital financial services space. And last but not least, to foster use case development. So these were the 5 key recommendations of the past document that was published, a report that was published. I think here is where you, developers, companies working in this space, SMEs, and eventually larger companies can play a definite role. It's important to bring forward the use cases that you are developing, and sharing that with the technical standardization development bodies, so that they can also progress in a way that would ensure that we would widen the market and for blockchain and DLT solutions. So if I can leave you with one message is this one, why not, that I already mentioned. So if you are involved in standards in a way, working product lead and working on technical specifications around blockchain and DLT, apply. SMEs can apply directly. It's not individual. SMEs can apply directly for funding, for contributions like technical reports and research studies, new work items, and active participation in technical committees. The 3 remaining cutoffs are 15 of October, 15 of December, and 15 of February, for up to, as I mentioned, 12,000 euros grant. And the last one would be, please engage with, if you don't know how to engage with the technical standardization bodies, engage with organizations like INATBA that actually facilitate the access to those technical those technical standard development bodies that usually are there with participants from larger companies. So for SMEs, it's easier to pass through an association like INATBA and bring forward those use cases, even if not in a direct way. We have, for example, the INATBA awards that is a solution to bring forward those use cases into light, that we can afterwards definitely make the connection to the standardization bodies. Thank you so much. I think I'm over my time. Thank you for listening.
Thank you very much, Ricardo.
Thank you.
We're going to move on from standards to something else that's very, very important. Actually, 2 things that come together, things that are not easy, a bit difficult, but together very, very important: cybersecurity and regulation. And the big question is, how can they work together? So we'll turn directly to our next presenter, Dima Budorin, who is the CEO of Hacken, and he's going to be tackling this question, which I would not want to tackle myself, but hopefully he will have some more insights on that. Dima, please jump in and tell us more about it.
In terms of time? 2 minutes, 3 minutes? Yeah, I think
It happens, right? All right. Very insightful event, I would say. The previous talk, I didn't know that there are grants for standardization, and we're definitely going to participate. And I encourage you to do this as well. So yeah, my name is Dima Budorin. I hope my presentation will be on. Yes. So this is my presentation, and I will talk about cybersecurity and regulation. Again, regulation, all the topics about regulation, but not a lot about cybersecurity. Why I'm here? Maybe because I already in this field for 7 years. Doesn't work. Okay. Yeah, this is me. So I spent 8 years at Deloitte in the beginning of my career. Then I did a little bit of bad karma stuff working for Ukrainian military consortium. And then we started with our team, the cybersecurity company called Hacking, 2017. And since then, yeah, we probably built one of the biggest cybersecurity companies in the industry. I hope, yeah, but I still, cannot click. Yeah, so we worked with almost every big brands in the space. It's easier to say with whom we didn't work. Oh my God. Ah, that's it, thank you, I'm going. Sorry. All right, now it's working perfectly. Now you know all the jokes. That sucks. All right, so we work with almost all the big brands in the industry, with exchanges, with protocols. We recently signed Ethereum Foundation as a client, big achievement. We closed the deal for 1.5 years. We work with governments, and yeah, we have several products in our portfolio, and a lot of and the team size is around 150 people. Yeah, so the main statement that I want to say, and that's maybe will be a little bit different from what you hear, is that yeah, our industry is very mature, still very mature. A lot of hacks, frauds, and scams, and we are the main guys who are responsible for that. I am responsible for so many hacks and scams and frauds in the industry. I've been in this industry for 7 years, and we still didn't learn anything. We still have a lot of, I don't know, FTX stuff. Exchanges still don't disclose nothing. They are black boxes, and this is my problem. And now I will explain why. So yeah, cybersecurity issues are not solved. Still a lot of fraudsters and scammers. The number just for this year is over like almost $2 billion just for hacks. Like in Web2 industry, there are no such numbers. You know, in Web2, the worst thing that can happen to you if you get hacked, you get some reputation damage, maybe some fine, but your business will not collapse because of you got hacked, and you will not lose all your money. All total from the beginning of our industry, the hackers earned almost $9 billion. And if to calculate with all the scams, it's almost $80 billion. Imagine what you can do with $80 billion. It's crazy amount. Even though the number of hacks is decreasing, but it doesn't mean anything. Just the hackers, they are switching their attention to retail. And for example, yesterday, one of my friends, he got, even though he's in cybersecurity, he got scammed for $420,000. And guess how? Yeah, just a social engineering and some losing attention, losing patience, and here you go, 420,000. That's crazy. One of the interesting facts that if you go to Web3 Security Bible, this is how I call reg.news, you will see that most of the projects that got hacked, they are not audited. So they have the audit label somewhere, but in fact this is not the full scope audit that was done for their infrastructure, or it was irrelevant audit, so they did for previous version of the code. So that's why in this Bible you will see unaudited, unaudited, NA, and so on. And yeah, and this is another reality. So in Web 2, like as I said, the worst thing can happen is like you lose some reputation, and but companies are still spending from 5 to 10% of their software development budgets, and from 20 to 25% in banking and finance on cybersecurity. While in crypto, we calculated the average spend is 2%. I don't have this slide, but what do you think is the total market spend of in the year for third-party cybersecurity services? Just random number. How much money all the blockchain companies are spending on cybersecurity a year? Let me remind you how much they lose every year. Any guess? So we calculated the market is around $300 million. So altogether they're spending just $300 million, but they are losing 1.8 billion. So, and why this happening? Okay, yeah, so, because audits, they are not obligatory, yeah, it's an industry standard, so you kind of show that, yeah, I was audited, everything's super secure, but in fact, they are just doing it for marketing purpose, to raise money, to build trust from community, so to gather money, and, you know, yeah, Web 3 is about zero trust, immutability, and transparency, they say, but this is all fake, unfortunately. And yeah, let's also talk about fraudsters. You know, like the biggest thing that is like frustrating me a lot. You know, like every time I'm thinking about FTX, I'm also with this you know, strange face eating cucumber. Is because why we didn't learn any lesson after FTX. Like some of the exchanges started to like make proof of reserves reports. It's good that they started to do something, but in the reality it doesn't give any assurance that these exchanges are solvent. And unfortunately, fortunately, I know some cryptocurrency exchanges founders, and I know exactly that they are using user deposits, they're touching them, they are sending these deposits to other exchanges to support liquidity. Unfortunately, I also know that they are printing unexistent tokens and selling them to community because they know very well the percentage of how many tokens are gonna stay at their exchange forever, because people, like once they deposit to exchange, they very rarely like withdraw them, especially tokens. They like to withdraw USDT, but tokens no. And of course, all the manipulations with trading and with margin trading. Centralized exchanges are the biggest bad boys in the industry. And after FTX, no lesson learned, nothing changed. And yeah, and scams, you know, like unfortunately, you know, we're moving in the industry of Wild West Casino, you know, especially this 2024. We were expecting, you know, some, I don't know, some interesting DeFi protocols, some structured financial derivatives, some exciting, I don't know, like ways to invest. But in the reality, we have 4 guys, 20 years old, who invented the Pump Fund, the meme coin launchpad. And the reality is that it's, I don't know, thousands of meme coins are launched every day at Pump Fund, and people are doing some crazy stuff to get the attention, so to sell the coin. So I gathered the most funny one. So one of the guy, he lived as a dog for 7 days. So, you know, like, please buy my meme coin. I'm a dog, so like my dog. Some guy was asking his mom to participate in the video stream so that she, like kind of entertained people. And and one guy just find some girl and this is our industry. This is the narrative of 2024. And it's a shame. This is big shame for me, and and most of the people in the industry right now, they are like these guys. Okay, so let's pray for the regulators. Regulators will come and solve all our problems, and we're gonna live again in a wealthy, transparent industry. Yeah, they will come. BTC gonna be 100K, ATF, blah blah blah. I mean, so. But that's not how it's gonna work. And the responsibility of why we're having this lies only on us, of builders, OGs, and whoever is still in the space. So regulations, yeah. The main issue right now that I see is that we still don't have like kind of global compliance platform, and we don't have we don't see that regulators speak to each other much. There are some really nice efforts from different countries. I would like to highlight the Korean regulatory authority. They're very strict. But and still they have a lot of scams. Like the Terra Luna comes from Korea, but it's very strange. But the reality is that the exchanges are pretty well financially audited, so you don't see the at least frauds within the exchanges. Singapore, European Union, you hear a lot about European Union today. For the Abu Dhabi, I would also highlight they are risk takers in the industry, so they are ready to be first movers to give license to DLT foundations. Most of the big exchanges are there, and if probably you hear that the Binance CEO right now, Richard Tank, is ex-regulator from Abu Dhabi, from ADGM. He was FRSA regulator, and so their plan is to, softly become transparent, compliant, and fair. And my favorite one is Turkey. Turkey regulation started. They also have quite a lot of cryptocurrency exchanges. The most funny one is that their regulation started from Todex scam. So there was an exchange called Todex, and it was hacked by a reasonably small amount, $20 million. Yeah, with the total assets of almost 2 billion. But the owner was so upset with this case that he decided, okay, I will recover these funds. I will go to margin trades and with user deposits, and I will earn back the 20 million and protect and cover this hole. And in fact, he lost all the 2 billion, all the user funds. And after that, yeah, Turkey regulators, they implemented very strict rules, good ones. Okay. Liechtenstein, yeah, so another slide. I'm sure you also hear some very, very good initiatives of the Liechtenstein, and yeah, right to dispose is something really innovative. I like it. Yeah, and US, the worst regulator ever. I'm not afraid to say it. They cannot even pronounce Binance without a mistake. You remember that video, Binance? It was hilarious. And yeah, the very strange attacks on MetaMask, on Uniswap. This is, but we understand where it's coming from. People from US, they are old school. They building. They don't change their jobs. They've been building the GDPR or their equivalent. I don't remember how it's called, for 20, 30 years, and they just already cannot learn any new stuff. And yeah, I think they are the worst. Chaotic statements. Oh my god. So what is our vision? Like, our vision is hacking, what needs to be done. I underlined 4 steps. Some of them we are doing, and I will speak about them. So first is regulatory education, and this is very fair statement to say, because from our experience we see that okay, the regulators they're very smart people. Absolutely, they are not getting their jobs for granted, but they are not in our industry for 24/7, and they don't understand all the risks that we have. So we have to speak with them. We have to invest time in working in educating them, and that's why we as Hacken we have. We went to European Sandbox, and we have 3 case studies, and we already had the first dialogue, and on our dialogue was the record high regulator presence, like 12 regulators from European Union came, which were very happy, and we will continue to invest. They're very curious, they ask very good questions, and our job our job is to build the security guidelines for them, standards. The same we do with ADGM. ADGM are very ambitious, yet they are investing a lot. ADGM, Abu Dhabi Global Markets, it's like the center of the Middle East regulation initiatives. And for them, yeah, they are given the licenses, as I said, and this license, for now, most of the blockchain protocols, they don't understand why they need the license. Most of them, they are using it for, hype news to boost the price. But the reality and the dialogue that is being talked right now is that soon all the exchanges that have the license of ADGM, Binance, Bybit, OKX, they will implement certain listing rules for the tokens that you will have to have a license if you want to be traded. It's coming. It's a big process. It's a lot of resistance. Of course, Exchange doesn't want. Exchange wants to list, meme coins, gets 40% of supply of meme coin, dump on retail, make a lot of money, and this is their business for years. But this is coming. And yeah. And then, the second thing that, I will highlight is the standards. And our initiative, how we participated, we entered the Ethereum Enterprise Alliance, is non-for-profit organization, not government-backed. It's just like just a bunch of OGs from Canada mostly. They have. And Vitalik Buterin was one of the first contributors to Ethereum Enterprise Alliance. So we have built the standards of DeFi security. Not only security, DeFi risks. What can be, how this risk can be mitigated, and what are reporting disclosures that we recommend as a best practice to show to the public that your risks are covered. Very big document, 200 pages long, a lot of contributors from most of the prominent companies. Ernst & Young was also the co-chairman. Consensus, Quantstamp, Open Zeppelin, Certic, C4, all of them have put a lot of effort. So if you're interested in risks, in DeFi risks, I really recommend you to check this work, DeFi Risk Assessment Guidelines. And then the idea that we want to work, because again we put again a lot of efforts. We see that there is no platform that unites all the regulators. There is no platform that explains to project founders why they need to get license and how to get license and what the license gives to you. and also the standards of every regulation is different, and that creates another obstacle because especially exchanges, they go where it's easier to get the license when their rules are not that strict, and that's what's one of the reasons why they moved from firstly from Singapore to Hong Kong and now to Abu Dhabi. But somewhere we need to lock them down and and start to make the regulation more difficult. But if we don't have the global platform that analyze all the regulators, then the companies will not have this pressure from the community, from the different countries, and this is the plan. And if you are a lawyer, if we have lawyers in the room, I would like also to establish the communication channel, because we can, with all the Mika and Dora compliance, we will be very happy to accomplish you, to complement you with Dora compliance. And the last but not least is that, as I said, regulators don't talk much to each other, and I think the open dialogue where we can, gather the regulators at one table, round table from not only European Union, not only US, but especially Singapore, Abu Dhabi, Turkey, Hong Kong. We need to get everybody in one room. And why not Liechtenstein to lead this, There is a nice place nearby, Davos, and there is a global event there happening every winter. And why not to do this effort and to hold regulators roundtable, maybe not this year, but at least plan for the next year. So thank you so much. Once again, this is my fault that our industry is full of scams, hacks, and frauds, and I hope that you realize this as well, because no regulation will help us. They are just tools in our hands, and this is our responsibility. Thank you. If you want to know more, this is QR code of Haken and me. Thank you. Bye-bye. Thank you. Thank you.
A very brave statement. This is our responsibility.
Thank you. Thank you, sir.
Very good to hear. Moving on from regulation to another R word, although I'm not exactly sure if it actually applies here, but looking at the title of the next presentation, which will come from Ulf Vigger from QPQ, excuse me. The presentation is the Internet of Economics and the Garden of Eden problem or dilemma, which makes me wonder if there will be some religious angle to what he has to tell us. Most often religion doesn't play into crypto, although if you talk to Bitcoin maximalists, you might get a slightly different impression. Anyway, I will turn it over to Ulf, and he will tell us more about that. Over to you.
Thank you. Yeah, don't be too scared. It's going to be light on religious content. So I'm the CTO of QPQ since about December last year. The Internet of Economics is something that we've been talking about. And with that, I would like to briefly describe it as essentially letting value flow as easily as information on the Internet. Now, that might seem extremely scary considering the dynamics of information in social media. But I would argue that one reason why things have become so nasty is that we've decoupled information from cost signals. Maybe we could differentiate between cost and value signals. If you think about free market economics,
One of the superpowers of free markets is free pricing, where cost signals allow you to prioritize prioritize your use of limited resources. Now, usually there was a significant cost signal involved in, or cost involved in insulting someone. You know, it might be pistols at dawn or whatever, but you would pay a cost in the old world. On the internet, not so much. Also, it doesn't really cost anything to send a hateful message. That might be hard to get to unless we want to restrict freedom of speech, but we could actually boost the value signal of saying something constructive. And so anyway, this becomes a huge problem technically. I think blockchain and crypto has opened up a potential to address this problem, and we've spent a lot of time actually innovating and coming up with ways to deliver massive throughput, response times, often perhaps at the cost of the decentralized pattern that was sort of the key to crypto. Obviously, legal challenges. We've heard a lot about that in this conference. This is my first time at this crypto summit. I'm really impressed so far. There are also cultural challenges to this, not least cultures clashing and having very different ideas of how to value things on the global stage, and also political challenges. I'm not going to talk so much about politics. I have a quote there from Tim Berners-Lee. Some of you are perhaps about as old as the book Weaving the Web. It came out in '99. Tim Berners-Lee is usually thought of as the father of the World Wide Web. And in his book, when he talks about that, he had this quote: "An organization loses its intuition when the person who has the answer isn't talking to the person who has the question." And I think this is sort of the promise of crypto as well. So, how do we do this? Well, we've heard a lot about regulators. Joachim had an analogy of the unregulated space as an ocean. I picked a different image, Dante's Inferno, but essentially regulators looking at decentralized systems find very little that they like. And trying to figure out how to regulate this is essentially a nightmare. And entrepreneurs, and I'm talking about real-world entrepreneurs, looking at blockchain, essentially they see this. If they want to live in a jurisdiction, which we all do, right? They take the blue pill, unless they want to get in trouble with the authorities. Or they can take the blue pill and just dive in, YOLO, right? And I think one of the problems here, culturally too, I've been in the blockchain space now since 2017, building core platform technology, and I found that it's become almost a religion in the blockchain world that you shouldn't have to trust anyone. There shouldn't be any trust anywhere. It should all be decentralized. And people do not live in this space. In order to be able to actually transact conveniently and safely, we need to be able to trust people. And we need people to trust us if they're going to do business with us. So we've been talking about what we call the Garden of Eden dilemma. So going back to, say, like 2017, that was also when they started thinking about MiCA. It was all very much greenfield. And we were trying to build technology based on what we understood at the time. And I think a lot of very good work was done. Some good platform technology was built. I was on the Eternity core team, and I'm really proud of what we did. We were more or less done with the platform end of 2019. And then we had a lot of time thinking about why commercial players didn't come to play with us. And so there is a great temptation when you've invested so much time into developing something in this space, and then there is all this energy and money in the space, and the commercial users that you expected, they don't show up. So what do? Well, a lot of people start thinking about the shortcuts and start thinking about how they can monetize what they have. It's very easy that the blockchain becomes the business case, or your currency becomes the business case. You start doing market making and everything. The quote there is from Paradise Lost. Early blockchain pioneer John Milton, 1667 was that. He had actually been blind for many years when he dictated this poem, Paradise Lost. It's about the fall from grace in Eden of Adam and Eve, and it tells the story in 12 books, short books, but still 12 of them, on how God actually foresaw the fall because he invested in men full freedom, also the freedom to fall from grace. And in order for them to realize their potential, there had to be heavenly justice. I don't know why, if that was the reason why he evicted Satan to earth, coast outside of Norway as it happens, and had him start teasing Adam and Eve. Actually, it also talks about how Satan actually knew that he wanted to get back to heaven, and the way to do that was ask for forgiveness and repent, but his pride wouldn't let him. So then he decided to destroy everything God had done. And I would say, to put a more modern spin on this, another newer book recommendation might be Knowledge and Decisions by Thomas Sowell. It is essentially the first book that almost all his other books, outstanding books, are built on. And it's absolutely amazing. It talks about how free market works. It talks about incentives. It describes incentives in regulation, in authorities, in businesses, private enterprises, individuals. And I think you can actually frame this whole argument also in Thomas Sowell's terms, because a lot of this, it basically becomes structural. We become bound by the commitments we make, by how we organize ourselves to move towards our goal. And not only do we develop pride because we've invested so much in our journey, we're also very good at rationalizing and telling ourselves that the path we see ahead is the one that we have to take, and it's the right one. So possibly this has become even harder in our modern day with social media because of the ease with which you can end up in a bubble. It used to be hard to form a community when you had to go around and actually convince people one by one. But there it is. So going back to the Internet of Economics idea and how we could try to unlock all this. I mean, essentially, when would this mass adoption of crypto happen? And Thomas Sowell in Knowledge and Decisions, he actually built on an article written by Hayek about dispersed knowledge and how the free markets are superior to top-down control because of the total amount of knowledge that can be managed, even though every single actor may not have an incredible amount of knowledge because we're limited in how much we can understand, but so are the people at the top. So knowledge is one of the scarcest of all resources. If we can manage it on a free market, then we can unlock a lot of innovation. But also, this becomes sort of the threshold to mass adoption. All entrepreneurs, individuals, independently making their own decision about whether this is actually safe to start using, which makes it really hard. We have to come up with ways to describe in clear terms, fully transparent terms, why we are actually regulation compatible. Because if we're not regulation compatible, people who have businesses that are bound by regulation are not going to want to play with us. And so we've been spending a lot of time thinking about essentially crypto as money, crypto as actual money. What does that look like? And what dynamics get unlocked if people can actually start using crypto as a real payment, like in the grocery store, in the subway, on the web. Nano payments, micropayments. Micropayments have already been defined, so I like to talk about nano payments instead. So one thing I think we need to do is to limit what is the permissionless space. So I would like to say that this is essentially, we do have one area, and this is what I would call the negotiated space between jurisdictions. Because jurisdictions tend to be limited partly by culture, we have a number of, essentially this is how it works today. We have a negotiated space where you could say the US is an economic area, the EU is an economic area, China, Russia, and we might talk about international law occasionally, but usually those are treaties, fairly awkward agreements that don't always hold, don't hold equally. And here, I think if we would stop talking about permissionless and talk about algorithmic consensus, then it kind of becomes more clear what blockchain has to offer in this space. Because then we can look at this and say there are actually some guarantees here. They should be very clear and by necessity limited. And but also, this cannot be controlled by anyone. But this is a problem that we've worked on. Essentially, Bitcoin showed a lot of promise, except for all the flaws, but it was a prototype. Hey, it was a pretty impressive one at that. So, if we can then focus on the interfaces between the algorithmic consensus, what we essentially call the decentralized world, and the regulated world, where you can run, for example, permission blockchains, you can run actual proof of stake. We would like to talk about actual proof of stake blockchains, where you have known actors, known stakeholders, that are actually under regulation. The thing is, you need to make sure that we bridge the gap where these chains, if you run a permission chain there, isn't disconnected from this algorithmic consensus. So somehow we need to make this connection, at least in part, carefully integrated into the consensus for this to work. So what would this essentially look like? The unregulated domain, connecting the regulated domains with a simple, transparent algorithmic consensus. Then the responsibility becomes to clearly describe how does this work? How is it safe from vectors of control? Because vectors of control in this space will be utilized, will be leveraged to try to monetize this space, to try to censor this space. This is the really scary part. And unfortunately, we do not have any solutions for this that are 100% safe. So it's going to have to be partly a cultural thing too, a negotiated thing. So we can try to rely on transparency and clarity, and this is a dialogue that we need to try to have, where we have to educate people on what questions to ask, how do you actually inspect this space, and what do you need to reassure yourself of. Now, looking from the regulated domain, at least the way I would like to look at it, is that this global permissionless currency, that is essentially this blockchain, or many blockchains. Why would we trust a single blockchain in this space? But we would want them to look like this. Could be thought of as a foreign currency in the regulated space. I think this seems reasonable. If someone disagrees, please let me know why. In the regulated domain, we can go to town with KYC, we can have actual stakeholders. The pattern here, good patterns should be able to be applied recursively, so you could imagine maybe companies working on a supply chain problem where you don't trust anyone to actually control this whole network, but having a similar setup there. But then you could actually, proof of stake is great here, because you can actually bind the stakeholders by contracts, because it's an actual jurisdiction, you have property laws, you have contract laws, you have enforceability. A lot of things get unlocked in this space if we can manage the bridge. And also, we have culture. Now, I don't know, that's not really a quote. I didn't really make it up. I think it's pretty much derived from Montesquieu or something. That I think it's appropriate to look at laws as essentially the codified outer perimeter of culture. And if we do have a natural economic area with a good legal space, a good regulated space, we can have a high trust society within there that where a lot of things don't necessarily have to be regulated, because culture carries a big load. But in the global scene, not so much, because there are so many cultural differences that we'd have to fall back on something very simple and codified. And I think there is where permissionless blockchains can play a role. Just don't try to apply them within the regulated space, because it's not compatible there. So, Greg Chu mentioned in the panel debate upstairs about Tony Benn's questions that he asked in a debate in the European Parliament. What power do you have? Where did you get it? In whose interest do you exercise it? To whom are you accountable? And how can we get rid of you? And certainly for anyone offering a solution tying together the global transaction network, these things should absolutely be asked. They should be required to explain this clearly. And I think that was pretty much all, and my time was up, so thank you.
Thank you very much, Luke. Very interesting presentation, and look forward to see how it develops going forward. We're going to turn now to our last presentation before the coffee break. This one should be quite interesting, since it is from someone who is quite a fixture here in Liechtenstein, Janislav Malachov, founder of Eternity, and he is going to be presenting today QualiChat, a blockchain-based quality chat platform. I actually have no idea what this is, so I'm sure he's going to tell us all about it. Yanni, over to you.
Thank you.
Cool. So,
Yeah, my name is Janislav Malachov. I am a serial entrepreneur. I created several projects here in Liechtenstein. I'm gonna tell you a little bit about it. Next. Does not work. What? Okay. Cool. So, yeah, as already introduced, I'm talking today about QualiChat, a new crypto chat app. But first, a few words about myself. I'm here as the founder of the KeyPair establishment, headquartered here in Vaduz and at the HOB, at the House of Blockchain, which I also co-initiated bunch of years ago. Meanwhile, I think like 6 years ago, has been with Thomas Nägele, and I'm also the founder of Eternity Blockchain. It launched its layer 1 blockchain in 2018. Ulf, who was just presenting before, he participated at the launch as one of the core developers. And yeah, also really curious to see how the technology is being like forked, how it's being like used in other projects now with QPQ. I assume so far they have not released the source code, but looking at the developers, it's a simple guess. So Superhero.com is another project. It's a wallet. It's a cross-chain wallet for Eternity, for Ethereum, and for Bitcoin. Yeah. So let's. I'm gonna actually go back to the slide in case we have some time left over. I can happily talk more about our other Liechtenstein projects. But today the focus is a new chat app. And first, a few problems about chat apps. All of you are using chat apps day to day. Probably the majority of your day online on the phone is being spent on a chat app. At least for many users this is the case. WhatsApp, Telegram, also just SMS, also kind of like nowadays a chat app. And all of them, they have a lot of spam, a lot of scams, even the old school telephone network. There are people calling you, bots calling you and trying to make you buy something or spend your money. Then additionally there's this censorship problem, or the insecurity of the chat platforms is creating then also an environment that the regulators want to yeah, have something to change there or to impact it. So they can yeah, influence the messages, the accounts. They can block them. They can for essentially no reason, you are just cut out of your social network, your chat app. You don't have any ownership over your identity, over your profile, over what you created there. They can most likely read all your messages and do some monetization with algorithms over selling your data to corporations to display you ads. And then there are also problems with the moderation, more and more AI moderation as goes in connection to censorship and no ownership. These are a lot of problems. I think you all have experienced them, at least some of them. And short, you can say that the chat apps currently, they lack quality. There's not really a quality conversation possible, especially not in, let's say, the public space, because you never know who this person is, where they are from, whether they have, in the connection to crypto, whether they have tokens or whether they're just trolls and just spreading fake news. And so we have the solution. It's QualiChat, the quality chat app. It's available on the app stores, Android and iOS. There's a QR code, by the way, in case you want to load it. And also for the web. And yeah, QualiChat is a secure, high-quality chat and collaboration platform for token holders, powered by a smart token gating mechanism. So you log in with your wallet, with your favorite, currently only Ethereum wallets. Who of you has an Ethereum wallet? So it's like, I don't know, like 10 people maybe, so quite a lot. And who of you has tokens inside this Ethereum wallet? Like not Ether, but other tokens. Mostly the same people essentially. So everybody who has Ethereum wallet has also tokens, and who has actually no tokens but an Ethereum wallet? Is there anybody? Nobody. Cool. So you can all use this chat app to connect to fellow token holders, and it's all verified by the Ethereum blockchain. So you can be sure that nobody is inside the chat who is not a token holder. I'm going to talk more about how exactly it works. Here are a few, let's say, more abstract values of the project. The mission is to create a better, more trustworthy chat platform, leveraging the power of crypto, blockchain tokens, and self-sovereign identities, and the power of AI, while reducing spam, fake accounts, and misinformation. Who would not like to have this? Is there anybody who thinks we need more fake accounts and less crypto in the chats? I think it's pretty straightforward what we did. It's a very simple application, and the vision to it is a world where digital communication is secure, private, and verifiable, and where spam is a thing of the past. Do you believe me that we can make spam a thing of the past? Let's see. So QualiChat stands for quality communication, verifiability and accountability, self-sovereignty, privacy by design, and ownership and autonomy. So the accounts, they are not on the QualiChat app, they are not on the QualiChat platform, they are on your, or on the Ethereum blockchain. Inside your wallets, you have the keys essentially to hold your identity, your username. And QualiChat platform also does not have any access to any of your private chats, since they are all end-to-end encrypted, cryptographically secure. There are public chats though on QualiChat, which are obviously not needed to be encrypted since they're public. Just that it's clear that also public chatting is a feature of the app. And this is actually the core feature, the token gating mechanism. Has anybody of you used a token-gated chat app where you essentially prove that you have certain tokens to be able to access this chat? Only one person? Nobody else? So I think all of you are probably also Telegram users, right? And all of you are probably going into the Telegram groups according to your token holdings, meaning if in case you have like some let's say some Solana, you would probably be subscribed to the Telegram Solana chat. And QualiChat makes it completely seamless, the experience. So you just need to wallet connect your wallet, and you're instantly inside all of the chat groups for all of your tokens, and it's completely verified that there's nobody inside these groups who is able to write to the chat. So everything what's written inside is the public chat groups is for sure written by fellow token holders who have at least one token of this asset class or asset group. And yeah, your in case you have a Ethereum name, ENS name, it will be also displayed so people can find you through your ENS name, and they can essentially chat to your wallet, and you can chat to other wallets. And I mentioned the public chats, but very soon there are also going to be private chat groups. So additionally to the public groups where everybody is verified that they have tokens, everybody who writes, and there will be private chat groups which are end-to-end, which will be end-to-end encrypted, so you can be having private conversation with fellow token holders, And yeah, it really works with every ERC20 token on the Ethereum blockchain, and probably soon also more blockchains. So you don't need to set up anything, just Wallet Connect. It's one of the standard login mechanisms for the Ethereum blockchain. One click essentially, and you are having access to these exclusive chat groups. And yeah, you can then engage, and as the last step, you can also build your own community. It's becoming increasingly more and more simple to launch your own token on the Ethereum blockchain. There are websites like Pink Sale. You just go there, click something together, and you have your token. You can then distribute it, and everybody who has a token will be able to access this chat group. So for example, the conference organizers could distribute a token for everybody participating at this conference as a memorabilia token, and then they would have access to this exclusive chat group and nobody else. So yeah, the UI is extremely simple. You can check it out. Here's the QR code. Join the ERC20 communities now. In case you want to talk to me later, the only way is through this chat app. I'm not replying to real-life conversation anymore. Yeah, here again the QR code. Download it now. And there's a web app which looks very similar to Slack. In case you're using Slack, it's a business collaboration platform. So this was QualiChat. I don't see anybody downloading the app, but my nickname there is Janislav.eth. So in case you want to talk to me, Janislav.eth. So let's go first to the first slide again. Second slide. So my first name .eth. You will be able to find me on QualiChat. You just need to have a Ethereum wallet which supports Wallet Connect, which almost every Ethereum wallet does. So I think I have got more time. How much time do I have? 1 minute? No, you don't. Oh, okay, good. So when the doors open, I have like 5 minutes. The door is open. So it's yeah, Janislav.eth, but since I have a little bit more time, I'm going to talk a little bit also about where this originated from, this chat app, and how I came to Liechtenstein. I created or founded the Eternity establishment in 2016. In 2017 we did a token sale. In 2018 we did launch layer 1 protocol with kind of like integrated layer 2 state channels. It's been decentralized, so I don't really do any public talks anymore about Eternity, but I'm focusing on the application layer, on the user layer, such as with QualiChat, to make use also of the Eternity blockchain. Although QualiChat is not using Eternity at the moment, probably in the future, if anybody of you downloads the app and chats with me, we will continue the project. If nobody wants to download the app, I think we don't need to work anymore on QualiChat. So thank you for your support. Also, the HOB is a project which I co-initiated with Thomas Negele. It's the House of Blockchain, where many Liechtenstein-based companies have their headquarter. And one of the, I can't say newer projects, it's also already 4 years old. The Crypto Castle is a real-world tokenization project. A real castle, half Baroque, half Renaissance, 5,000 square meters in the center of Germany, where Martin Luther wrote the Bible, and Satoshi Nakamoto invented the Bitcoin blockchain and wrote the white paper, and also the Gutenberg invented there the printing press. We have an old version of the printing press at the castle. So there are currently events taking place to fill up the space there, but there's no heating system, so we are planning to do a token sale as soon as the markets warm up, to raise some funds to create this hub for the crypto community in the center of Germany. This is going to come. I think the markets are warming up, but still, I think there's still some improvements to be made. Yeah, any questions?
For QualiChat, do you have any target groups in mind, like special communities or user groups? Or
Crypto users at the moment, only crypto users, at the moment even only Ethereum users, but in the future generally everybody, because we believe that combining messaging or communication with blockchain is a must or a big need. It makes a lot of sense to have more verified communication. Maybe somebody of you wants to disagree, but it's hard to trust random accounts online. Even I don't know. Even famous people are misquoting some impersonators. It's too easy to just fake somebody's identity online, and with a blockchain verified platform, this is, I think, it's becoming way more difficult, especially if in the future you can also set that in case somebody wants to contact you, he needs to also send a certain amount of value to this chat message, which you then can return in case you think it's a legitimate request. But yeah, this way I think spam should be completely eliminated, in the sense that it's becoming too expensive, too prohibitive to send unsolicited chat messages all around the internet. And yeah.
It also would be interesting to play with other token standards, like fractional ownership, for instance, or fungible, non-fungible, whatever.
Yeah.
You can access very different user groups which really feel maybe this sense of belonging and talking to each other in an exclusive way. So, and of course I wanted to ask if like DAO features are into plans. Like voting is already possible, like polls, or like where the token shares is a component, or
It's currently, there's no governance mechanism, but the bigger vision for this project would be also turned into a DAO. Currently there's no token for QualiChat, so you can't buy into the QualiChat platform, but you can launch your own token and have instant utility for your token, which is often hard to achieve, meaning many projects failed to get any utility for their token. And here you have instant utility for the token in case there is demand for quality chat apps. There will be also more tokens integrated, more blockchains integrated, probably also eternity. So download the app, support us, support quality chats, communication. Yeah, I think it's important. Yeah.
All right, let's wrap it up. Thank you very much, Yanni.
Cool, thank you.
Thanks for the presentation and the insights. I'm very interested to check out the Crypto Castle. Maybe I'll even make it there in person. That concludes the first part of the second half of the day. Come back after grabbing a coffee. We have two very interesting panel discussions, which actually will probably end up being more like debates. So come back, join the conversation. We'll see you at 4:20. Perfect. After the coffee break. 4:20.
There we go.
gentlemen, here we are, back again. We're in the home stretch of today's program, but of course, the best is coming at the end. First of all, however, I have a question for the crowds here with us today. Anybody a Lord of the Rings fan? You've seen Lord of the Rings, maybe read Lord of the Rings, yes. And you know, of course, that Bitcoin maximalists love Lord of the Rings most of all. Do you know why? Because they believe in one chain to rule them all, right? Or some of them do. Anyway, that's not the topic exactly right now, but Martin Schmidt from Q Development is going to talk about blockchains as governance mechanisms and governance technology. So we'll welcome him onto the stage, and he has some very interesting things to share with us. Martin, take it away.
Hi. Hi, everyone. So thanks, Ian, for the kind introduction. As Ian said, I'm going to talk about blockchain as governance technology today. I know it's late in the day. This is a cozy setting. So if you have any thoughts, ideas, questions, just feel free to shout, raise your hand, or ask. So I do have something prepared, obviously. But if you have thoughts on the topic, just let me know. Always good to have a discussion. So blockchain as governance technology. I will talk about a couple of things today, mainly why I believe that blockchain essentially is governance technology. Secondly, I'm going to dive into different flavors of governance, namely objective, subjective governance, and this new thing that's been floating around in the crypto world recently called intersubjective governance, and hopefully get some clarity on what those terms mean. And lastly, I'm going to give an outlook of where I think the space is going, should be going, and what is missing today, what we need to develop in order to make blockchain as governance technology more useful and more meaningful. I'm going to start with a simple definition taken from Wikipedia of what governance is. So Wikipedia says it's the process of making and enforcing decisions within an organization of or society. And I'm going to argue that this is essentially the big element of what blockchains do, but also going to go into what's lacking today and what blockchains can't do on their own and what's missing there. But first of all, most important question for any talk, why should you care? Why should this be of interest to anyone at all? And the answer to me is fairly simple. First of all, governance, in my interpretation, is closely related to security. And what do I mean by that? So governance, essentially as a process of making and enforcing rules and decisions, provides certainty in what my actions today will cause as impact in the future. And the clearer the rules are, and the more I can rely on them, the more security I have. Now, that alone could also already be a good reason to care about governance, but even more importantly, security leads to value creation. Or in other terms, to create value, you need security. The more security you have that your decisions today will have a certain impact in the future, the more value can be created in societies, in economies, and also in blockchain-based systems. And maybe the easiest way to internalize this thought is that if you have no security, there will be no investment. That's very simply putting things, but essentially is true. In jurisdictions, in economies where you don't have certainty about the rule of law, people will not be willing to invest. And I would argue that the same is true for any blockchain-based systems. If an action that you're taking today, it just has random outcomes in the future, then it's very hard to invest. People will just not do it, and no value will be created. Now, one key point that I want to bring across is that governance comes in two flavors. One is deterministic, the other one is non-deterministic. And what blockchains do natively is only deterministic governance. We need to add the non-deterministic part to make it really useful, make it really valuable. That's one of the key arguments that I will make today. But let's dive into deterministic governance first. So you've probably heard of the term code is law, which relates to deterministic governance, meaning that you have code that is based, in blockchains on the underlying code and on the incentives that you have behind the blockchains that ensure that you know exactly, if you have a certain input, what the output will be. So the deterministic part is exactly that. It works like a vending machine. You put $1 in, hopefully if everything works as intended, you get your candy bar or whatever it is that you wanted to buy. There is zero uncertainty. You have an exact relation between input and output. And this is what blockchains do fantastically well. And this is the whole point why blockchain was invented, to solve the problem of very simple transactions. Bitcoin was intended as money, where the transaction is fairly straightforward. I give you $1, you have the dollar, I don't have the dollar anymore, and that's it. End of transaction, nothing else happens. And the use cases that we have that work well today are exactly that. We have digital cash, we have Bitcoin, we have tokens that we can exchange, and we have simple exchange protocols for those tokens. So, if this then that, I send, 1 Ether or whatever it is to an automated market maker that works purely on a code is law deterministic basis, and I know that I'm going to get back a certain amount of whatever it is, USDC or other tokens. Now, already there you could argue we have something called MEV, you can front run people, already there the boundaries are getting kind of fuzzy. You could argue that already there the principle of code is law breaks down. But theoretically, I would argue that those exchange protocols and digital tokens are pretty much everything that you can do purely on a code is law basis. For everything else, we need some other form of governance, and we need people making decisions, enforcing rules at the end of the day. And you have this also in traditional finance, where even relatively simple products or seemingly simple products that essentially are basically governed by an algorithm like an index fund. You just have your algorithm that says, if at a certain date the market capitalization of a stock is in a certain range or puts it in a certain position, it will be included in the index, otherwise not. Even there, as it turns out, you have tons of opportunities to corrupt the system or to break the system, to play with it, which is why we have index committees, so human oversight over those, fairly simple products. Little side note here on the term code is law. I think it's positively connotated in the crypto world mainly. So people say, code should be law. Interestingly, the person who invented the term or coined the term code is law thinks otherwise. So explicitly, he said something very different. Loris Lessig is a Harvard law professor, and the work actually predates crypto on code is law and governing software algorithms. He actually said, no thought is more dangerous to the future of liberty in cyberspace than this faith in freedom guaranteed by the code. So I think that's an interesting comment. Also, he repeated that in similar terms later on, where he said basically his term code is law has been co-opted by the crypto community, but in a really perverted way, because it wasn't intended as it is used today. Now, let me move on to non-deterministic governance, which I believe is a really critical part of making crypto useful and expanding use cases based on blockchains. So one question to ask is, do we even need that? And as I said before, even in TradFi, where you have algorithmic products, you still have some human oversight, you still have some governance aspect, so that already gives you an indication that it is needed. But also, if you look at the crypto space today, apart from really basic base layer blockchains and maybe simple exchange protocols, escrows and maybe some forms of automated market making protocols, you have governance everywhere in the sense that every DeFi protocol has tons of parameters typically that are determined by governance, meaning often it's people voting in some shape or forms. It can be token holders voting on them. It can be people that simply hold multi-sigs or have keys to the multi-sigs that determine them. So inevitably, you already have governance in those protocols. Non-deterministic governance. So there are a few examples here, just bullet points, and this is by no means a complete list of non-deterministic governance that you typically see in protocols, even the simple ones that we have today, let alone more complex use cases. Now, this is a practical answer, but there is also a theoretical one. In economics, there is this idea, this concept of incomplete contracts. There was a Nobel Prize for it in 2019, and it basically says exactly that all business contracts that we have in the real world are incomplete in the sense that they provide a guideline, they provide a framework, but since it is impossible to project and forecast all possible future states of the world, they are by necessity incomplete. And at the end of the day, this explains a lot. This explains why firms exist and so on. It also explains why we have the rule of law and courts that interpret laws. Otherwise, if this were not true, at the end of the day, if we just were sufficiently good at executing decisions, we wouldn't need courts because there would be no need for interpretation. But as those two gentlemen, Oliver Hart and Bengt Holmström, have argued, this is just unrealistic. And importantly, even if we become better at finding algorithmic solutions to governance problems, we just push out the boundary, meaning for every problem that we solve algorithmically, there will be new ones that emerge that enable us to create more value that will be non-deterministic. So it's not like, we're just not good enough yet to solve everything on a code is law basis. However hard we try, this will not be the case. Now, short sidestep, I've promised to also deal with this term intersubjective, which has been established by a protocol called Eigenlayer recently, that coined the term, and it's kind of made the rounds in the crypto scene. And they've come up with this concept of intersubjective truth or rules, which they define as truth that if a sufficient number of people look at it, will all agree on that this is true. And I think this is kind of a cop-out of this, code is law, can we eventually code the world or not problem, because I think at the end of the day, the class of problems that we can call intersubjectively solvable will be very small, if existent at all. So if you go down to the very basics, and also there were examples given by people working on those protocols. For example, a price, can be a price of an asset. Can that be intersubjectively true? Meaning, you can't originally determine it on the blockchain, but if people just look at pricing data that's out there, they will all agree what the right price is. I would argue this is not the case, because you have different exchanges, you have different types. Do you look at bid-ask prices? Do you look at the last execution? I mean, there are so many definitions of price that are possible, that if you go down to the edge cases, you will always find things where people will still disagree, even though at the surface area it seems to be an easy problem to solve. If you go far enough, and the edge cases are always where a difference is made, a lot of the problems that you have will have a degree of subjectivity. Now, the crypto community, I think, has recognized that issue in a sense that there are a lot of governance frameworks and a lot of protocols that have implemented some form of governance. But in my view, the sophistication and maturity of those governance systems are far behind the maturity of deterministic governance by blockchain. So by now, I would argue that a lot of blockchain infrastructure is quite well developed. You know, we have scaling solutions. We have a reasonable amount of certainty. I mean, yes, there are still uncertainties. There are hacks in the long term. You have forking risk and so on. You have questions about how protocols evolve. But at least in the short term, if I send a transaction on Ethereum or on Bitcoin, on the Bitcoin network today, I know exactly what will happen in the next few minutes. So there is a lot of uncertainty that's been taken out of the systems. With non-deterministic governance, that's not yet the case. And we have a lot of cases where things have gone wrong. Classification that I find helpful is, you know, fast rugs and slow rugs. We tend to think about fast failures more often than slow failures, meaning that what hits the press usually are those fast failures where a lot of money or tokens or value is destroyed in one transaction or just one bad decision. In my view, the slow failures are the more important ones, and the ones where more value is either destroyed or not created in the first place, simply because we don't have the governance systems yet to have more sophisticated models on chain, where, you know, simply value cannot be created because you know, the systems are not there, or as we see in many DAOs, that just over time, slowly and almost unnoticed by the people who deal with them, are just corrupted by the people working with the DAO, working in the DAO, working for the DAO. So this is a phenomenon that we see often, that DAOs or protocols start out with good intentions, but if there is human governance involved and you don't have appropriate safeguards, what happens is that the people who come in you know, just tend to extract as much value for themselves as they can, and then the DAO or the protocol slowly but surely just withers away, which is of course not great. Lastly, also a really important point, of course, is regulatory and legal risk of subjective or non-deterministic governance. So here is a quote from the Tornado Cash ruling. Tornado Cash, for those of you who are not familiar with the case, that was a crypto mixer essentially, where you can anonymize transactions, and the developers were tried in the Netherlands, and what the court explicitly said is that lack of actual transfer of governance to the communities was critical in the decision to find the developers you know, being in charge. So I think that is a pattern that we see in a lot of crypto projects right now, that they are claiming to be decentralized, but in fact are not. Decisions are made by a very low number of people. And of course, you know, if those people then make mistakes or do something that's you know, illegal in the worst case, clearly they are liable. So also there is a big risk of crypto projects that, you know, think they're decentralized but are not, and that puts contributors, developers, and decision makers at the end of the day yeah, at a lot of risk. So yeah, I'm going to quickly go. I mean, there are a lot of things that can go wrong in governance today, or do go wrong. There's been this report a few months ago that found that governance poses a threat to 75% of the top tokens, meaning that governance decisions in the protocols can you know, directly impact the smart contracts on which the protocols work in a way that is really hard to see, hard to understand for outsiders, for users of those protocols. You know, again, this is just the sort of hard threats of badly designed governance. As I said, in my view, the slow threat of just not creating value, or protocol just slowly losing value over time, is even more significant. Now, having said all that, I think there is a way forward. And I think this is one of the most exciting areas in crypto to work on right now, because just because it doesn't work today doesn't mean that it can't work. Quite the opposite. I think one of the areas And of course I'm biased since that's what I'm working on, but I think the most valuable areas to work on right now in crypto is non-deterministic governance. And a very broad framework is, what do you need for governance to work? You essentially need 3 elements. You need to set the rules, so constitute the rules. That sounds obvious, but it's actually something that many people forget. So they just put people in a room and or in a DAO, in a protocol, and think they will just figure it out somehow. That typically doesn't happen. So explicit rule setting, also what the boundaries are of those rules, is the first element. Again, this is not, by the way, a speech against code is law. So whatever you can code, you should code. So if you do have elements of the governance that can be hard coded, that is typically good. But typically you also find that this is just a small part of the protocol that can be handled by purely deterministic governance. So constituting those rules, setting those rules is the first step. The second one is enforcing those rules. And again, this is where a lot of protocols today fail. So there are quite a few applications, blockchains, that have given themselves constitutions, but often they're just more mission statements and there is no mechanism to enforce the rules. And we've had numerous examples where the rules were broken and nothing happened. And this is, of course, not how it is supposed to work. And I would argue that having rules that are unenforceable is worse than not having rules in the first place, because you give people interacting with a protocol a false sense of security. They may think they can rely on the rules that are explicit, that are somewhere on a website, but if there is no enforcement mechanism, in my view, it's poor design. So enforcement can take various forms. On-chain enforcement of rules then requires a way of decentralizing this enforcement. Lastly, you have the rules, you know how to enforce them, but what if there is a dispute, and disputes will inevitably happen. Wherever you have people agreeing on rules, if they're subjective, there will be disputes around how to interpret the rules. So a mechanism of resolving the disputes is essential. Now, this is a short chart on how the Q protocol is set up that has exactly those 3 elements. A constitution at the bottom, then a mechanism on how rules are enforced with a set of different stakeholders that interact with the protocol, that play a part, then that are tasked with enforcing the rules, and lastly, a method of resolving disputes within the protocol involving external private arbitration courts that can then be, where there is a judgment by an arbitration court, can then be implemented on chain. I think in the interest of time I can't go into details, but please feel free also to ask me later, or happy to chat about that in much more detail. And lastly, I just want to leave you with a framework that I find helpful, how to think about non-deterministic governance in crypto projects or protocols. And I deliberately put it at the same level as transaction security, which is the deterministic part. So you have a whole stack. You've probably all heard of the term modular blockchains, modular blockchain stack. You have a whole science and whole set of protocols around how do we ensure transaction security, which is deterministic. If this then that, I sign a contract, I know exactly how the contract will be executed. I would argue that governance security related to non-deterministic governance decisions is equally important, should be thought of also as an element of the crypto stack base layer, on top of which then you have middleware, and on top of that you have hopefully interesting applications and use cases that will be built. With that, I'm already, I think, 3 minutes over my time, so thanks a lot for listening to this topic late in the day, and feel free to ask any questions. I think probably not on stage because I'm already a couple of minutes over, but I'm around, so happy to chat. Thank you.
Thank you very much, Martin. Thank you very much for your presentation.
Thanks, Ian.
And we're getting ready now for the fireworks. At the end of the day, I promised you fireworks. I promised you discussion,
Sorry, guys.
debate, opposing views on some very fundamental topics, and those are coming up. First of all, of course, the gentlemen are going to set up the stage. Is everybody ready for a good debate? Yeah? Are there any lawyers in the house? There's at least one. Yes, Ricardo, nice to see you again. There will be at least one on the stage, which I think means that the discussion will be very, very good. And of course, there might even be a chance for you to add your opinion as well, depending on what the moderator thinks about the level of discussion. Just backstage a moment ago, I heard someone say that there actually was no debate at all, since the answer is clear. And the question, of course, is Switzerland versus the European Union or the European Economic Area, which is better to build your DeFi home? Yeah, some people have some pretty strong opinions. I look forward to hearing those opinions. I have my own opinion as well. Maybe you have yours. But to lead that discussion, we're going to turn to Nicola Stoyanov from the Eternity Foundation, also a long-time resident and actor in Liechtenstein. He is getting mic'd up, and he is going to be joined by, at least two lawyers. 3 lawyers. Oh my, this is going to be quite a discussion. Very, very interesting. Fortunately, I am not a lawyer, so that won't be a problem. Nicola, I think it's over to you.
Yes, I'm here.
Do we need Take it away.
Anything or they? Oh, okay. Oh, we got. Thank you for the applause. And more importantly, thank you for being here at this late hour during our day. Let me quickly see what the topic is of the panel. Perfect. No, I'm kidding, obviously. We will do a very, very, very quick intro so you guys can just share 2-3 words about each other. And then I remember that we had actually prepared a couple of questions with you guys, but after I sat with you, I think we're going to do it a little bit differently. So, Andreas, take it away, please.
Yeah, thanks for being here. I'm Andreas. I'm a partner at MME. We're a law firm based in Switzerland. I've been in the blockchain space for the past decade, accompanying first the Ethereum Foundation, since then hundreds of projects, a lot of the big DeFi projects as well. Of course, my opinion is very clear on the question this evening, but I'm curious if you can pursue me. So,
I mean, I would not dare to do that, because I was for more than 5 years with PwC, and the jurisdiction which I recommended most of the time was Switzerland. So I'm Alreza, I'm a German-based lawyer, and I also work in the crypto industry for some time. I started in 2014, so I think I know a couple of players in the market. Right now I'm working with a couple of DeFi players, and I'm trying to help them to do their business in an according manner. Yeah, and I'm happy to be here today.
Thank you. Johannes, I'm the Liechtenstein lawyer in the round, and we are partner at legal law, and we are specialized in blockchain law. And yeah, the same as you. We fight with the DeFi rules and with the clients.
I think this is the segue to myself. I'm Ben, I'm the non-lawyer in the group. I'm one of the co-founders of Jelly Labs, a company based in Vaduz here, actually a few meters from here. And we're building, we build and we're ongoing on building a DeFi platform on a blockchain called Say. And I'm happy to give my take on what it actually is to run a platform.
This was actually quite an interesting development, because in the beginning it was only lawyers in this panel and me, and there would have been a lot of arguments on that one, so we needed somebody like Ben to actually join us and be able to tell the other side, which is the actual product side, which is the important part in my opinion, because at the end, if we're honest, your guys' job is to make sure that people like Ben and other projects are able to execute and perform without having to end up in very small cells around the world. Now, Ben, I'm actually going to start with you, because you're the project here, and then I'm going to move through you guys. I've been contemplating about this for a very long time, because as a founder myself, especially having had the privilege to be early in this space, I didn't have to choose a jurisdiction. I was lucky enough that we got the offer back in the days to set up Eternity in Liechtenstein. We were the first company to do so back then. And I'm happy to see that the Liechtenstein ecosystem has been growing since then. But for you, things have changed. You know, like for us, we were a layer one. It was a white paper. We had to execute on technology, and we had to build a blockchain. Now, you with products, time has passed. You have DeFi came on board. You had NFTs. You had all kinds of other things that popped on. And especially with the DeFi space, if you would have to choose now a jurisdiction, and you were not based in Liechtenstein, where would you go? Like, why would you go to Europe at all?
That's a tough question. I mean, I'm probably not the person that is always on top of the game, what is like the best jurisdiction for what exactly right now. I mean, I try to keep up, but I think these guys, they know better, and because it's their day-to-day business. I think in general, it will kind of depend on like how Mika develops for DeFi, because as far as I'm aware, and I guess you guys will chime in here, it's not really set in stone yet how this is going to look like. So it will be very interesting to see. I think looking back on building something in crypto and launching something in crypto, I think obviously there are places where it's easier to do it. I think that's for sure. Probably also cheaper. I mean, it's in the end, it's up to the founders themselves how much like legitimacy they want to have with their product. I think there are many places. I mean, Dubai is probably one of them that is what people talk most about at the moment. That's what I, from talks to people, notice is that Dubai is pushing hard on getting a framework for DeFi and getting this ready. And it's very open and has a better tendency to, has not such a tendency to overregulate than, for example, the European Union. So that's probably a spot I would look into. But I mean, Europe, I guess, has still a place, including Switzerland and Liechtenstein. I would be a bit careful with Germany. I mean, the process there take time, and I mean, I think that's it. I mean, in a nutshell.
You mentioned Dubai earlier because out of Dubai only high-level projects have come out over the last couple of years. So absolutely the perfect example for a very good jurisdiction. This was sarcasm, by the way. Ali, I know that we spoke earlier about this, or we spoken about this earlier. You also advocate a little bit for Dubai in our conversations. Why Dubai, not Germany? I mean, you have BaFin. It's pretty straightforward. It's clean. It's clear. Why?
I mean, that's a problem. It's not really clean and clear when it comes to DeFi, because DeFi is not really defined. What is DeFi? So there's not really common understanding what is DeFi. If you look inside the MiCA text, it says DeFi is not regulated by MiCA if it's fully decentralized. So what is fully decentralized? So what does it mean? And that's only the regulation part. We have to talk about the liability part, the civil law part. So that's the reason why many people go to Switzerland, because of a civil wrapper. And they also had in the early days by FINMA, by the Swiss regulator, some recommendations on how to treat tokens and stuff like that. So there are some guidelines, and there's something you can look at as a founder. Yeah? And this is something that you need as a founder. Some guidelines, not taking like dozens of lawyers to tell you what not to do. You need someone who's telling what to do. And this is something what I think Dubai is right now doing pretty well. So the VARA license you can get, it's I think the first license which allows you to set up a legal wrapper, which could be not like a limited partner company or limited liability company. So it could be something, some kind of entity, yeah, or some kind of legal person. And then they also accept self-hosted wallet users, which means you can set up your DEX and you have users who do self-hosting, yeah. And this is what Dubai with the VARA license accepts. And this is something you cannot really easily get in Germany or within the European Economic Area when you look at MiCA, because in the end of the day you need some crypto asset service which you provide, and for this you get the license. And therefore, coming back to your question, I can say, yeah, look at Dubai, not just for the regulation, for the United Arab Emirates, also for the taxation, also for the centers, the economic centers they have built up for crypto players. They are supporting a lot also on how to get an office, how to get a bank account. These are the small things which are important for a founder, like the easy things, not looking at the complex legal stuff, like office, bank account stuff, how you can pay your people, and how you can do your business without infringing any laws.
I read the first Vara text that was released about a year ago, I think, plus minus, and in all honesty, it read like the people that had created it had A, no idea about the technology, and B, no idea what to do with it. It was incredibly overregulated, and the freedom and the support and the encouragement that you're talking about were absolutely absent in the first version. So I think I can agree that it is a work in process, but on the other side, I also think that Vara is still from being something which I would choose as a founder to set up my company around. Services, etc., PP in Dubai is straightforward, so you have that everywhere. You have that in the Crypto Valley, you have that in Liechtenstein, you have it in Lisbon, you have it all around the world. It's been accessible, so that to me, unfortunately, would not be enough. On the other side, Johannes, I was fortunate enough with Thomas to start, I mean, you guys finished it, but the Liechtensteiner Token Gesetz was something that really, in my opinion, set a pretty good example, you know, with the different canisters and everything around that. And you guys also created, in my opinion, with the Liechtenstein Blockchain Act, that's the name, a very important part for MiCA and for the entire regulation for the European Union that is going to come. Tell me a little bit more about that. How was this? How has it developed? Do you guys see more people coming now to Liechtenstein? Do you guys see more people staying somewhere else? Or
yeah, I mean, the first question is always when we talk from Dubai, do you want to really to live in Dubai? So I mean that is also a decision of the founders if they want really going to go on to the Dubai route, or they perhaps like the good weather here. And stay here. I think that is also a personal decision also on the founder team. When we come to the Liechtenstein Blockchain Act, the TVTG, so we are in the last hours of the TVTG, so we will come to MiCA and to harmonized European law. So we have done the same in Liechtenstein and Germany, more or less. And as you already pointed out, the main question of all DeFi projects is what is fully decentralized and how you can really create your project that it is really decentralized and on the whole life cycle. So because it's that's the hard thing to achieve. Also on the technical side, how you set up everything.
I have one additional question that I've been wondering about for a while. If I set up a company in Liechtenstein and I operate out of Liechtenstein, does that mean that in the future I am going to be MiCA compliant and I'm going to be able to bank, execute, etc.? Or does it mean that it's still that, I don't know if offshore is the right word, non-European part where you would have to do additional steps in order to be able to execute in Europe?
So in general, then we are part of the as part of the European Economic Area. MiCA is applicable, so same playing field. So that there's no difference. And at the end, when we talk from DeFi, the company itself who set up the protocol, they don't operate it. So in a perfect world, you set up the company, which creates then the protocol, and then after some times you don't need it anymore because it's self-executing.
Andreas, but, honestly, I have always been an incredible fan of Liechtenstein and Switzerland. Like I've over the years very much enjoyed how things are structured, especially in the legal way. But also what I've recently seen is with the last regulatory adaptations, I think that it has been a little bit more of a hindering to when it comes to stable coins especially and other things, rather than an enablement, which to me sounds like a huge missed opportunity, because Switzerland is, until today, as we saw yesterday when we were in Zug, it's the beginning. It's where Ethereum set up their foundation. It's where thousands of other products and protocols continued or followed their path. How are you seeing things right now? Is it still, has it made it easier, or is it more complicated?
No, things always get more complicated over time. I think we can agree on that. I think we need to distinguish a bit. I mean, obviously the latest developments on the stablecoin regulations, and we had the big discussion around staking, which then fell apart again. So we're back to square one, more or less. Before the discussion, they all related to financial service provisions. So also the stablecoin that is being kind of issued in a very much regulated space. Switzerland definitely not making it too attractive, is a financial service. Now we're talking about DeFi, so that should not be a financial service. That should be an infrastructure service which replaces financial service and intermediaries. So it's a different gameplay. And when we look at this space, in my view, we need and you've done that already in your initial remark, we need to separate the different pieces which we look at. On one hand, normally DeFi approaches consists of, I would say, 3 key areas. One of them is some token issues, let's call it that way. Most DeFi approaches, they have some kind of token. They need to issue it. Switzerland has a very clear framework how to do that. I would trust to say it's more attractive than the MiCard framework, so I would always opt to say, hey, on a global level, issue it out of Switzerland, then address the European market out of Switzerland as well, with special white papers if needed. But I think I wouldn't kind of advise my clients to issue out of the European Union. Dubai is not the European Union, it's not part of the title, so I don't need to comment on that. Then the second part is governance. So you need to kind of find an appropriate structure for your project. Ideally, a structure that allows you to decentralize governance over time. I think for me, Switzerland with the association model provides that flexibility, so it definitely works quite well. And the third part is the operation itself, like the DeFi protocol. And there, I think on one hand, it really depends from a risk policy perspective. What is it about? What kind of risk are we talking about? How is it an AML concern a regulator may have? Is it something which could completely disturb the financial market? So we need to assess that, and of course the level of decentralization is important, and that applies both for the EU, it will apply to Dubai as well, it will apply to Switzerland, because as soon as you're not sufficiently decentralized, you're going to be liable for the operation, for whatever you build on a tech stack. And I think in Switzerland we have gained some certain clarity what that means. We have certain guidelines. Now the Danish regulator in the EU also has issued guidelines. They're like similar concepts in a way. So at the end of the day, our role as legal advisors will always be to shift something which may not be completely decentralized, because no one I've ever seen is from day one, to kind of start with a level that we feel sufficiently comfortable that we can launch out of the jurisdiction we are.
Who out of the people here understands or knows what it means to be sufficiently decentralized? Yeah, that includes me too. So that is super important also, and super interesting to me, because on a protocol level, I can say that we had thousands of nodes, we had 10,000s of wallet users, etc. But in DeFi ecosystem, how do you what is sufficient? Because is it the people that trade? Is it valued as what is it actually? How do you work with that?
I'd be happy to start, but of course
this is an open question.
I think you need to look at from first of all. I think the governance clear needs to be very decentralized. So the ones kind of deploying the protocol or whatever it is, the application, they should not be able to control the governance through token holdings. I think that's point one. Then on the tech level, what we normally look at, and there's a very long list, so I'm going to limit myself to the very top priority topics, is certainly control of smart contracts and technology. As soon as you start controlling parameters, upgradability, we need to look at it in more depth. Then there's the question of dependency. So how is it said, how dependent are users from you being around? So the test is always, assuming that your company and all your web servers would kind of be turned off overnight, would the user still be able to access the funds inside the protocol? Yes and no. And I think from my perspective, it's a user interface question quite often. So I think just having one user interface is simply not enough. You need to decentralize the interfaces. Ideally, you have multiple interfaces. In a best case scenario, you don't operate an interface yourself at all, but you incentivize third parties to do that. So those are the key kind of central attack vectors from a regulatory perspective, from my view. But I'm sure you have your view on that as well.
I mean, we wrote a paper on that, and in a nutshell, I can tell you, you cannot clearly say what fully decentralized means. Not even the people who put it from the ESMA and the MiCA text know it. So no one really knows it.
It's great that somebody like this writes regulatory if they don't know it.
So and I can give you also like examples from practice. So if you look at Tornado Cash, would you say that Alexei Petsev was someone who had influence on the protocol afterwards? Was he, as the judge who put him in prison, was running a company? Could he have stopped the transaction which the Lazaro group was doing with Tornado Cash? I would say no, wasn't. So in my opinion, this was fully decentralized in some way. So, but still, they put him in prison. Still, OFAC put Tornado Cash as a non-legal person on a OFAC sanctions list. So even if I would tell you this is fully decentralized, this doesn't cover you from U.S. authorities, U.S. Treasury, OFAC putting you on an OFAC list. This doesn't stop you from a European court in Netherlands to put one of the main protocol developers in jail. Yeah. So all of that is something where I would say, yes, I mean, I understand Dubai is not in a European economic area, but Switzerland neither. So, and we saw what happened with the founder of Telegram. Yes, he was put in Paris in custody, but then quickly the gentlemen from the Emirates, they raised the question about their aircraft orders, and then he was out of prison. So this is something which helps you to have also in a business environment some power to do decisions and to have influence on the European players. And this is something you should also put in mind, because in the end of the day, we as lawyers can say it's like this or it's like that, but if a court or a judge or the authority decides otherwise, we cannot stop them.
Johannes, just a little bit about, because I want to move to Ben on the stage and get his opinion, because what you guys are saying right now to me sounds incredibly complicated if I would run a product. If it was a blockchain, or if it was an infrastructure, it's a different thing. But a product, but we'll get to that in a second.
Yeah. So I think the most crucial point is the control rights on the protocol, that nobody really can change or the protocol alone or with a small group, and nobody can interrupt the transactions, etc. And what we do in Liechtenstein is we have the possibility to make a subordination request to the FMA and can describe the project to the FMA and get a feedback on that. So you have some kind of legal certainty on the beginning of the project. Of course, when MiCA comes, perhaps some new questions, but that is also a comfort for the project on the
but do you think if the US Treasury would have picked up the phone, called Liechtenstein saying, there's a guy from Tornado Cash sitting in Vaduz, put him in prison, I bet with you they would have done it straight away like the Dutch authorities did it. But no matter if they said, oh, it's fully decentralized, guys. No.
Tornado Cash is a great example. I love it as an example because, yes, it has been very much decentralized. And yes, the guy, he earned a lot of money with it, so he received quite a bit income out of Tornado Cash fees. And if you look at it from an AML policy perspective, like it's really the worst things came together. You had like a tool design which was designed to enhance privacy, which obviously can also be misused to launder money. Then money has been laundered, roughly 50 million or something, by a North Korean hacker syndicate. So it's like the nightmare for every US regulator. Everything kind of boils down to that. And someone earns money with it, obviously you want to arrest the guy. So if you build that, I think if he would have built it in a way that he doesn't earn money with it, he would have been fine.
Do you know how much money he earned with developing the protocol? He got 1 Ethereum. One only, Alexei Petsev. You can look it up because he was asked by the Diablo DAO to set it up. He may have earned money afterwards
after fees.
Yes,
he did.
Because he was clever enough to buy the token, and to invest in it. But for putting up the protocol for which he was liable, he got 1 Ethereum only.
really small part of here for people that don't know what Tornado Cash is. You send in peers, you get out apples, and you don't know where they came from. That's kind of the idea of Tornado Cash. That's why it's also called like this, is because the transaction vanishes in the vortex, which allows you the asset not to be traced anymore. You would have to go into the servers that they actually run, and you would have to find the transaction in order to show that it was Andreas's transaction and not Ali Reza's, just for reference. But cool example. Now, Ben, like I'm finally getting to you. Very quick, like not actually very quickly, because this one is important. If I was you right now, until this panel, I would set up an entity if I had to in order to have a bank account, etc. pp. But I would host my product somewhere. I would make sure that is, I don't know if decentralized enough is the right word, but that it would make sure that I would not be able to stop it, that it would be peer-to-peer, and that people would be able to interact with each other without having to be afraid that the protocol would break, or without having to be afraid that their funds would be lost. I wouldn't build a bridge, so that's why. But the interesting thing now, after hearing this, when we're talking about sufficient decentralization, is how do you achieve something like this? Because I would set up a normal server that would run the product. It wouldn't be my mom, my dad, my grandparents, and whatever the hell. It would be the entity or myself that actually subsidizes this thing, which would not suffice to be decentralized enough. I wouldn't have interference in the product, but I would still have to host it somewhere, and I would host it on a server.
Yeah, I mean, you're bound to the physics that such a protocol brings with. I mean, we've tried, and we worked with Negele on this to get it as decentralized as possible already from the starting line, which includes governance. I mean, there are no admin rights on our end. The only thing that is centralized on our product is the front end, and this comes back to what Andreas said. But this is also a very tricky part, because there's basically only one thing you can do to decentralize this, is that you build an incentive model for people to run front ends. I think you did this with Liquidity, which is a CDP, a stable coin kind of like product, which has an incentive structure that people that build front end for this product get a share of, I actually don't know, like some minting fees or. And I mean, this is what you can do, and this is what we're planning to do with our front end. Currently, we're the only one that hosts the front end, but that's, I mean, you have to get there. I mean, it's not that you start a project and then everybody and their mother want to run a front end for it. I mean, if you're at a place where you're like Uniswap or whatever, I guess like it would be like this, and you have 30 people running front ends because it's so big and there's so much to make with it. But if you start, I think this, I mean, we're all interested. I think this is the signal for us to stop. We don't play with the lights and then the brawl starts. No, I mean, this is it basically. I mean, you, sorry, I kind of lost the context.
Uniswap, a lot of front ends, 30 people.
You have to build a product, but how can you have multiple front ends running if it's not you having multiple instances of the front end in the beginning? So I wonder how the regulation will look like for this, because everything else you can kind of enforce is by saying governances need to be decentralized. You can build it like this, but you cannot build a front end decentralized, because that's not how it's going to work.
Guys, by the way, sometimes the panel actually can go on for hours, but people are showing us that our time, unfortunately, is kind of coming to an end. Ali Reza, you have literally a moment to say what you wanted to say before I want to ask something very interesting.
One last word, because we are thinking, well, what do you have to do to be like compliant and not get in trouble? Just look at Bitcoin. Just look at Bitcoin. There's no front end, there's no nothing.
So ban should vanish.
It worked by itself, and the founder, whoever it was, or whoever the people were, they got vanished. And this is what I also said in front of the newspapers. If you want to really be on a safe side, do something like Bitcoin and then just vanish and let it run by itself.
Do you know they had pre-mines and everything, which would probably not go into decentralization, but that's a different story. One question that I have that I want to pose to is, When we're talking about those things, what you mentioned earlier, and I think each one of you said that also, it takes time to get to this decentralization part, actually. Do you think there should be a moment where, also in a legal setup, where you get the time to be able to be sufficiently decentralized, whatever that means, because even BaFin don't know, or Mika, but what do you think that time frame should look like, actually?
You're talking about like a timed sandbox for DeFi.
Yes.
Well,
yes, exactly. That's what I'm talking
we would love that, of course. It's never going to happen. I think mainly because you wouldn't even know which regulations you place the sandbox in. It could be anything, right? DeFi is so broad, so it could be touching AML, security regulations, whatever. I think you probably need to look at it from a pragmatic enforcement perspective. And that involves taking certain risks as an actor. I think we, of course, try to advise our clients to be as decentralized as possible, kind of eliminate key risks, knowing that certain elements will be decentralized later as fast as possible, and kind of assuming that during that time the project will not kind of rocket through the roof and attract the attention of all regulators around the globe. I think it's a really more pragmatic approach. At least in Switzerland, we don't have a regulator who jumps in and kind of fines, substantial fines startups who have no traction at all. We don't have this.
Ali Reza, Johannes?
Yeah, the problem is, so in German we say you can't be a little bit pregnant. So, so at the end you need a license or you need no license, so there's no time period. You can be a bank or something like that. So you really have to be careful that from the start you have already a full decentralized project. What is a little bit tricky on the beginning.
I mean, for me, I said it already, for me Bitcoin is fully decentralized. The validators or the miners, they're not covered. You can look in the Mika text, and therefore for me this is fully decentralized, and I don't know how long it took them to do it, but...
In that case, Ben, what would be the wishful scenario?
Yeah, I mean what Ali Reza says is right, but technically speaking, if we switch out our front end, you could still do everything with our protocol. It's like Bitcoin. Because, I mean, if you don't use front ends to set up nodes to mine Bitcoin, I guess like 99% of the people would not be able to do it. And that's the same for our product as well. I mean, if we switch off the front end, it's not that the funds are gone. You just need to go into like whatever forums and learn how to do this on the command line. But it still works. I mean,
it would kill 99% of your users.
Yeah, I mean the product. But this is how Bitcoin started. I mean, in the beginning, I mean, there we
remember
are.
the first wallets.
Yeah, it's like how was that? The process we have now with like you click there and then there's a wallet. I mean, I don't know how it was 2011, but I guess it was different.
Okay, guys, I think that concludes our panel. I hope it was interesting for the guys that attended. Thank you.
Great. Thank you. Well done. Well done.
Super, guys. Thanks a lot. There weren't too many fireworks, not too many punches thrown.
Thank you.
I think not too bad. All right, here we go. Step right off. Somebody is looking for your microphones. You are in possession of the precious microphones. You could maybe make some money off of them if you wanted to. But anyway, we are now to the last round. This is the final debate. I won't say the final countdown. A question that is as relevant as ever and perhaps fitting that we finish the day with this question. Innovation versus regulation, and of course Mika has been a topic all through the day, so now it's going to come down to this conversation. Actually, I find it somewhat ironic that we actually have this question ever since I've been in crypto, which is about 7 years. People have been saying we need more regulation, we need more regulation, we need clarity, we need regulation, let's have regulation so we understand what to do. In other places across the pond, actually, where I come from, they are still waiting for some regulation. Here in the European Union and the European Economic Area, we have regulation, except that maybe it doesn't actually please everybody. So that means that we still have a debate and a conversation. Which way is it going to go? Innovation or regulation? Or actually, can those two things coexist? I see some people here who I'm sure have a strong opinion about that. Let's see how the conversation goes. Maybe you'll have a chance to jump in and ask a question or give your opinion. In the meantime, we're going to have a panel discussion, and at least two of the speakers I know very personally, and I know how much they have battled and struggled with this question, innovation or regulation, or both together. We're going to bring them on in just a second. The panel tonight is going to be moderated by Kinga Pilat, Head of Partnerships at Catalyze. We have some fans in the back. Kinga, take it away and introduce the rest of the panel. Over to you.
Thank you. Great to have you here. Welcome to the very last panel today. Please, all the panelists come here on stage, and big applause for them. So let's start with a quick introduction. Tell us briefly who you are, what are you working on, and also how has been the conference for you so far.
Thank you so much. Thanks for having me. It's an absolute privilege to be here. Stefan Seidel, University of Cologne. Before that, I was at the University of Liechtenstein for 13 years, in fact. I studied digital innovation and how emerging technologies are implicated in institutional and organizational change. And particularly, I'm interested in how relevant stakeholders, so regulators, organizations, academics for that matter, co-construct meaning of these technologies. And what I'll be doing on this panel is I'll be talking a little about why it is so hard to get at the conceptual core, the essence of emerging technologies, and also try to give some ideas about how we can actually tackle that in order to balance innovation and regulation in these efforts.
Thank you, Stefan.
I'm Mauro Castellini. On one side, I'm a board member of the CCA, so also part of the organization committee and everything of today. I'm also board member of the Open Impact Foundation. That's an open source foundation where we give out money to people that develop specific tooling in the open source world. And the third role is I'm CEO of CM Ventures. It's a company where I support companies in trying to bring in blockchain services in the space, but in general, my goal is to try to bring forward the future of financial services where we should use more and more blockchain technology compared to the traditional world we use today.
Thank you. My name is Armin Schmid. I'm CEO of Bitcoin Swiss Liechtenstein. So the Bitcoin Swiss arm here domiciled in Liechtenstein for European access. And previously I used to work here in, well not here, but in Switzerland for Bitcoin Swiss. I was the Chief Product Officer in the last role. Previously working in e-commerce and payments. And I think just also somehow referring to the day, honestly I must say was a blast to talk about regulations versus innovation. I think this panel here summarizes it quite nicely. In the end, the entire day was about what's the balance between regulation and innovation. For me personally, I just must say it's a question about who's the co-pilot here, and also related to what is the risk-reward perspective. In the end, if there's no risk, there's no reward. And I think the regulation here it really has to step in and helps us to give the guidelines, the boundaries, what is right and what is left. And I think the entire day was talking into this, and I'm looking forward to the panel.
Thank you very much. Yeah, so great introductions. Thank you also for setting the scene. So yeah, innovation and regulation sounds kind of like contradictory to some extent. How do you think the regulators can find the right balance to, on one hand, foster the innovation, but also ensure that the right safeguards are implemented? Would you like to start, Mauro?
Yes, from my perspective, it's we see different ways how it should be done and how it shouldn't be done. And for me, what we now see in crypto with MiCAR is for me definitely a way how it should be done. It's not an over-regulation. It regulates the providers that handle assets of clients, so protection is really important. On the other side, from me, a negative example from Europe is the AI Act, because there we see that now there are these amazing AI tools out there from Google, from Facebook, from Apple, And not a single tool of that is available at the moment in Europe. And I would like to use it. I would like to have the decision power to say, I do not care if you use my data, what you do with my data. I would like to use your tool because it makes my life easier. On the other side, as soon as it goes in the direction of money and assets, I see it different. And that's why I think that MiCAR is now there in the right time, and also there. It didn't happen too early because Bitcoin is there since 2009. And now we have a crypto regulation. But really the big AI bump happened for 2 years ago, and now we already have an act there, a regulation there. So from my perspective, the EU reacted way too fast on the AI side, and probably a little bit too slow on the crypto side.
All right. Armin, would you add anything to that?
Yeah, just adding, in the end, the regulator themselves have to innovate. They have to make sure that they get some certain rules out, and in the end that really helps. And we have seen this in Switzerland in 2018, when the FINMA came out with the ICO guideline, and it was worldwide recognized to say, hey, we have at least a certain classification of those tokens into payment, utility, and asset tokens. That's one. Two, then they came up with a regulation related to stablecoin. Before now, the MiCAR stablecoin came into the discussion, and this was linked to in the end to the business. And I think that's something where I believe is an essential element as well, that you talk innovation from a regulation perspective, come up with a certain guidance, and then also talk to the industry. And I think here in Liechtenstein, but also in Switzerland, in the early days, this may have changed a little bit in the last few years, but the discussion really happened, and the Crypto Valley, or somehow the Crypto Nation Switzerland, and now the Crypto Nation Liechtenstein, most probably, because I think they're doing it slightly better. I would say this is really the path forward. Be innovative, make sure that you get the set out that really helps the startups, helps the businesses to know what are somehow the co-pilot setup. So I have to fly here, and that's it, and not further.
Yeah, amazing. And yeah, I want to ask you, Stefan, so let's not only look at crypto and AI. I think that's been topic during all the sessions today. Let's maybe zoom out and bring examples from other industries.
Let me talk real quick. I will. Let me talk real quick about the stakeholder perspective, because I think that is super important. So how do you get people who have vested interests in these regulations on board? And you mentioned MiCAR, and you mentioned the EU AI Act. And let me add the Liechtenstein, the Blockchain Act, TVTG for that matter, because my colleague Christoph Frick, who's in the audience, and I had the privilege to study how it actually came into being. And the way that stakeholder involvement can work is that people come together and try to make sense, give meaning to what is the technology they're trying to regulate. And the way it worked for blockchain here is that folks started to abstract away from cryptocurrency and blockchain to trustworthy technology and the token economy. And this is a topic that I think has been, at least I've heard a lot today about the real economy that also needs to be, be paid attention to. And the way it worked is that they were able to identify what is essential about the technology, and this is this idea of token, elaborated in token container. And I think when you speak about the EU AI Act, at least what I'm hearing is, it's tough. It's very hard to get artificial intelligence. It means so many things. It means learning. It means problems with explainability. It means autonomy. And really getting a grip of what the technology is about is important in order to be able to, regulate it and then also translate it into what happens in organizational practice.
Yeah, that's great. Yeah, I fully agree with that. And also in terms of, finding this common language between different actors, right? The regulators, but also business people, technologies. I think that's really the key. So here we talk a bit more in theory about this. Do you actually have some good examples of regulators across different jurisdictions that apply this right approach and really foster the innovation?
What I really like to see there is, especially also to go back to the crypto space, to compare Liechtenstein and Germany, for instance. Germany was super early. In 2013, they issued a statement that Bitcoin is a financial instrument, and therefore they killed all the business in Germany for nearly 10 years, because like you need to be a bank, you need to have a fully licensed, you need to have a banking license to offer something related to cryptos in Germany. And on the other side, we had Switzerland with the guidelines on a really high level on letting things happen, letting innovation happen, and then Liechtenstein with the TVTG, the Blockchain Act, and now the interesting thing is now with MiCAR we have a license or a license approach in Europe that is less critical and less hard than what Germany has done 11 years ago. And that's for me the good comparison of Switzerland and Liechtenstein compared to Germany, how Germany killed innovation immediately with one statement and saying this digital thing is a financial instrument, you need to be a bank to handle with it. And on the other side, Switzerland saying, hey, do it, but do it in a compliant way. And the same with Liechtenstein, where compliance was very fast, really important that the regulators take care of compliance and anti-money laundering, but on the other side, let innovation happen and see what happens. And if it gets big enough, then we need to regulate it and not too early. And again, that's for me the same thing with AI. AI became big enough and there was already an ACTA regulation.
Just adding to this, Switzerland did an adjustment to the existing law. Liechtenstein created a new law. So there are different approaches how you can really do this. And in the end, at least there's something out there. And I think that's the most important piece, that you have something in your hands you can work with. And there are two different paths. I think there's no best in class in my view. There are different rules and roles. But I think that the right thing is just to have something in your hand.
I think that's a very good point. So being able to iterate not only from an organizational perspective on what's the products and services, but also from a regulatory perspective. Mm-hmm. So some sort of adaptive iteration on the regulatory framework, of course, within the boundaries of what's possible. So certainly there are certain constraints. And then also looking at, there's an experimental element to that, to the extent possible again, and also looking at what works. So for instance, sector-specific regulations in other countries, because you were asking what other jurisdictions, because when it comes to approaches like sandboxes for a more for an approach to also testing what is possible, sector specificity matters a lot, and the expertise that you need in order to account for the different ways that sectors and industrial fields actually work, the logics by which they, innovate.
Yeah.
So iteration.
So yeah, what I'm hearing, so the constant dialogue involving the companies and being flexible while creating the regulation, that's kind of a key.
It's a really good point, yes.
So if you could name a few metrics that would be like successful metrics of regulation, I mean that when it comes to what are the criteria that you think makes the or like once it's implemented, like how would you assess it? What would you look into?
Maybe I can give it a start and then you can follow up. So I think it has to be principle based, not rule based. So it has to make sure that you get a certain guidance. Mm-hmm. It has to be narrow enough, but not too narrow and not everything included. So it has to be a certain level. The question now is MiCAR too far, too low? We will see. And I think it has to be applicable to a bigger ecosystem. That's a little bit what I really can benefit here now. I see the benefit in the MiCAR because you have access to 450 million people right now. I think that's the benefit. These were at least 1 or 2 or 3. Maybe you will add some additional ones here.
I think a really good point there is, and it's especially also now in MiCAR again, we can look at it how the innovation will happen in other markets. So we will have MiCAR, we'll have the licenses. If you're a crypto asset service provider, you need to have this license. And you will see, will the big legit providers that really bring out innovation regulate themselves in Europe, or will just say, we do not care for Europe. We just address Asia, South America, and probably the US. We will see what happens there. And I think we need to measure it on that side, that we see, okay, was it too much, or will the innovation still happen? And it will happen regulated here, and in unregulated spaces it will probably be a little bit more open, but still, it will still happen here. And if it does not happen here anymore, we know we went too far.
That's good points. Let me pick up on what you said about rule-based. Yes. At the same time, however, there's again different levels of regulation, and at some point we need to be able to control the technology. So I would add to your metrics adaptability, and then the question becomes at what level. So do you want to adapt at the level of law, which is hard, or at the level of standards, for instance, which is not as hard? So that's one. Then I've heard quite a bit about future-oriented regulation and, as I just said, adaptive regulation today. A word I would want to add is resilience. So staying fit for purpose, so making sure that the regulation is not outdated after soon, right? And that brings me back to this what happens in the TVTG, abstracting away from the very specific implementation, technological neutrality in a way, so that it can accommodate for some future developments. After all, the reason why we're talking about balancing regulation and innovation is because of disruption. Mm-hmm. So there's disruptions in the market, and they come, and we can't foresee them. Mm-hmm. And that's a big problem of regulation, I guess. So the more we're able to construct something that can react to disruptions, but not kill innovation, for that matter, that's a good approach.
And I think a really important point there is, and that's what I need to ask you back, because you mentioned we need to control the technology. And I think that's, if it means we need to regulate the technology, for me it's really bad, because we should never regulate the technology, but the providers that work with the technology. For me, regulation should always be technology neutral and not try to regulate the technology, try to regulate what blockchain is able to do. It should be, as soon as you act with a third party and whatever, this third party needs to be regulated and not the technology itself, because also the internet itself is not regulated, but providers that build on it, that build things on it, they are regulated. Just to be sure, what do you think about control?
You're right. So this was very unfortunate wording on my side. And as an academic, you said I'm hands-on earlier, but as an academic, I have to cite academic work at some point. So Bennett Moses has this idea of not regulating, well, everyone has that at this point, probably not regulating technology, but regulating socio-technical change, or being ready for socio-technical change, and that shifts the attention from the specific technology to users, outcomes, as we see in risk-based regulation, as we see in principle-based regulation. So no, I do agree. So it's not about regulating specific implementations of these technologies, except there are technological fields where that is necessary. If you think of genetics, for instance.
And
right?
Yeah, definitely.
And never forget, in the end, I think user protection, investor protection is one of the key elements. And yes, people may talk about, I would like to pay with crypto, I would like to do X, Y, Z. In the end, they don't care. We have a use case and we have the underlying technology, and I think the overarching setup has to make sense, and not something specifically to blockchain or crypto, or maybe we call it AI tomorrow.
Yeah, amazing. I would love to continue this conversation for much longer. Unfortunately, we only have 3 minutes left. So any closing remarks, any message you would like our audience to get before we wrap up?
I can start. I have one wish. People may say the Americans, they innovate, the Chinese, they replicate, and the Europeans regulate. I hate this. Let's make sure that innovation comes back to Europe, and we have to make sure that the path is clear and straight and simple, and we have this co-pilot that helps us to guide into the future.
Amazing.
That's a really, really great quote, and I would like to go also more in the direction of what Joachim Schwerin in the morning said, that we should not, for instance, BMW does not get sued because someone robs a bank with a BMW. So why are we in this technology world that people end up in jail because they have a chat tool, or they have a money transmitting tool? You should not hurt the people that offer technology. You should really face the people that really do bad things, and not the people that just offer innovation, because it's really scaring people off to be innovative if they need to be scared that tomorrow they end up in jail because they have done something new.
Last words?
Last words. Yeah, so we've been discussing innovation and regulation and how it can be balanced, and I think that's fine and important. So what I would want to add is, I think there cannot be innovation without regulation, or regulation without innovation. So they're really two sides of the same coin. And if you just think about what happens in applying technology in any field. It's not only about the regulatory frameworks like MiCA that we're discussing here, but it's also social norms, the cultural values that we share, and what we must not forget, the technology itself, because that dramatically constrains what can actually be done with that technology. So I think the question is not balancing innovation and regulation. Perhaps it is, but it's how to design regulation in such a way that it's not compromising innovation.
Great insights. Thank you very much. Please, big round of applause for our panelists.
And an extra long, hard round of applause for the last panel of the day. Yes, thank you very much. And these people are at the forefront of trying to make it happen. So congratulations, and looking forward to many innovations to come. Thank you to all of you who joined the panel and the event today. This is the end, or is it the beginning of something new? Let's see. Look forward to seeing you back next year. You're all invited to come upstairs to the main stage as the event closes. Thank you for joining, and see you again soon.
Thank you, Ian.
Thank you.
Thank you so much.